And I'd also like to thank everybody who's tuning in on our website and our social media platforms. Given the stellar cast that we've lined up today, and they've gratefully agreed to join us, there was understandably enormous interest to attend, and it was impossible to accommodate everybody that wanted to join. The India opportunity. It falls to me to set the context, and I could talk to you about the size of the Indian economy, the fact that we're the fastest growing major economy in the world. I could direct you to the equity markets, which are breaching new highs every day. I could talk to you about the growth in manufacturing, the increased focus on being self-reliant in defense. And I could also talk about the prospects that emerge from the payment system in India, which is arguably the most advanced in the world. But our guests today will give you much better insight on all of that than I ever could. They'll have numbers and facts and figures that could definitely wow you. So instead, I'll tell you a few things that are apparent to me as a 90s kid. My father waited more than 9 months for his first car, the Maruti 800. He told me just yesterday. It was a Patina Blue. And in June alone, Maruti Suzuki produced over 1.3 lakh cars. India is now the third largest automotive market in the world. It overtook Japan this year. My first phone was a 1100 Nokia. Some of you might remember that phone. India is now emerging as a smartphone manufacturing hub. With more than 31 crore units produced just last year, that industry was valued at 2.75 lakh crore, and that number is growing exponentially. And that smartphone penetration has resulted in over half of India's population now with access to internet, which in turn presents opportunities for financial inclusion and access to a plethora of other services and products. Not least of which is content on demand. And I represent a brand that is bringing you news and updates on the Indian markets on business on a daily basis on your mobile phones. In fact, we just had BQ Hindi launch this year. Some of you have already seen it. If you haven't, I'd encourage you to check it out because you have a lot of interesting content that is differentiated from BQ English as well that you'll find on BQ Hindi. And finally, the markets. The week that I was born, the Sensex was at 650. It is over 65,000 and testing 66,000 as we speak. And if it grows at the same pace as it has in the last 5 years, we're going to be testing 1 lakh within the next 4 years. That's the India opportunity, in my opinion. The opportunity to participate in probably the strongest growth market in the world. And that's my cue to introduce the first panel today. The three that will be joining on stage are market veterans and household names. It is my pleasure to welcome on stage Sunil Singhania, founder of Abakkus Asset Manager. Saurabh Mukherjea, founder and chief investment officer of Marcellus Investment Managers. And Nilesh Shah, managing director of Kotak Mahindra Asset Management. Moderating this panel is BQ Prime's very own executive editor, Neeraj Shah.
Yep. I hope I'm audible at the back as well. Perfect. Great. Thank you. Gentlemen, thank you so much for taking the time out and joining in. Straight to the queue. The India opportunity that is spoken about, everybody knows though there is this great population demographic advantage that we have. We are geopolitically well placed. It's a widespread bucket with not too much of concentration in any particular sector, so to say, unlike some of the other major economies. So these are all well-known facts. I would love to understand from you guys that when you think of the India opportunity as we sit on 66,000 on the Sensex, what do you think about? Any of you can start.
Should I?
Yeah, sure.
No, good evening, Neeraj. Thanks for having me, and best wishes to BQ Prime.
Thank you
for the journey ahead. So I think we all talk about the anchor or the host said that when he was born it was 650 and now it is 65,000. I think these are numbers. As we grow, the economy size increases, and obviously the Sensex or the Nifty levels are a reflection of that. I think we all know that we have grown from 0 to 1 trillion and 1 trillion to 2 trillion and 2 trillion to 3 trillion. But actually, what is a big opportunity? Now, right now, if you see in India, we have roughly 35 to 40% of the population who can actually spend money on anything which is discretionary. And what I mean is, people who have income levels which are 6 lakhs and above per annum. Below that, they are striving to just meet their day-to-day needs. I think in the next 10 years, this 35-40% is going to be almost 65%. And there will be some population growth also. So from roughly like 45 crore Indians who can afford beyond roti, kapda and makan, this number is going to be like 100. And I think that is the big opportunity as far as India is concerned. We all know that this 3 trillion will become 6 and 6 will become 8 or 8 will become 10. But when these 50 crore become 100 crore, I think the impact on everything, whether it is consumption, whether it is on growth, whether it is on need for infrastructure, whether it is number of cars sold, etc., will just be very, very different. And we are not inventing anything new. If you see what has happened in Japan or Korea or Taiwan or even US or China, I think we just have to extrapolate that. So for at least me, I think that is a big opportunity.
Okay, so the big opportunity, number of consumers in India increasing, consuming everything which is consumed by very few right now, and that is that one key opportunity.
That will get reflected in the economy side, So
Right.
to say that 3 trillion is going to become 10 trillion, it's given.
Right.
We can't debate or dispute whether it is going to happen. It is the only thing you can debate is whether it is going to happen in X years or X plus 2 years.
That's true. So, okay, great. Okay, thanks, Sunil, for that opener. Saurabh, to your mind, what is that big opportunity that you think of?
I think more than the opportunity, it's worth thinking through the non-linearities involved, right? The human mind struggles to think through non-linear changes. And I think we've lived through in the last 5-6 years, we've lived through in India, 3 non-linear changes, which I don't think have fully played out. I think the effects will be felt for the next decade or so. The first non-linearity is financialization. Right? So I remember 6-7 years ago, I used to be a broker and I used to go to the office of both of these gentlemen. I used to worry big time about India. I used to worry about accounting fraud. I used to worry about the macroeconomy. I used to worry about lack of financial penetration. Then in the space of 3-4 years, right, demonetization happened, digitization happened, and very quickly financialization took off, the mutual fund industry took off. And if you look at the pace of that, it's remarkable. So if I look at the PMS industry where I work, 15 years ago, PMS AUM in India was 20,000 crores. Today, it's pushing 280,000 crores, right? And a big part of that has been the last 5-6 years. So financialization will happen not at a linear rate. It will happen at a non-linear rate. Pretty much everybody in this room, including the industry that Sunil, I, Nilesh represent, we will see rapid growth. I reckon we will see something in the vicinity of $1 to $2 trillion of domestic inflows over the next 10 years. The second non-linearity is digitization itself. So hard as it is to believe, UPI was only launched 6 years ago, right? And today, UPI transactions account for $1.8 trillion per annum. 51% of GDP is going through UPI, right? And the reason for that is network effects, right? If Neeraj is on UPI, the greater incentive for Saurabh to be on UPI. If Neeraj and Saurabh are on UPI, Sunil is on UPI. So if you look at the NPCI, go to the NPCI website, see the digitization of transactions, it is an exponential curve. COVID was a bad exponential curve. Digitization of finance is a good exponential curve. This has huge effects, right? Reduction in working capital cycles, reduction in tax evasion, lower transaction costs. And again, we'll see the benefits of the next 10 years. The third non-linearity, China. Right? China's economic suicide, I don't think has any precedence in the modern era. And if we go to Chennai, if we go to Bangalore, we can see the rate at which China's economic suicide is transforming India. So tomorrow, the world's largest machine tool plant goes live in Hosur. Right? 2 years ago, had you told me that in 2023, India will open world's largest machine tool plant, 220,000 square feet. It's an unlisted company based out of Kolkata. The plant is in Bangalore. Fanuc in China has the world's largest machine tool plant for the last 10 years, 2 lakh square feet. Just to give some people a sense of 2 lakh square feet. 2 lakh square feet is broadly the area of 2 football fields. Right? The plant that's going to go on live in Bangalore tomorrow is 2.5 football fields. And on the same site in Hosur, three factories in parallel will go live, and the factories will be 100% occupied from day one. This is the impact China's economic suicide is having on India. Our pharma industry, our electronics industry, our defense industry, huge swathes of our medical device manufacturing industry will see exponential growth. So 3 exponential factors together make for a storm of change over the next 5-6 years. And it's very difficult actually to comprehend it, even for people like us who live in the financial sector. I think what we're going to see in the next decade probably doesn't have precedence, certainly doesn't have precedence in India's history. I doubt even China would have seen what we're going to see in the next 10 years.
I'm sure everybody is happy to hear that. But as difficult as it may be, Saurabh, over the next 25 minutes, I'm going to try and grill you on that very topic. Rest assured. But let me first get in an opening thought from Nilesh Bhai as well. To your mind, what is that big India opportunity? I mean, it could be market driven, it could be economy driven, it could be just as a nation. What is that big opportunity for India? Albeit, please try and correlate it with how people can, benefit out of it.
There are many Indians living in America, about 50 lakh, and their median income is $1,25,000. We are 142 crore people. We have the same genes, blood. If we had same per capita GDP, our GDP should be $177 trillion, 50 times higher than what it is today. Now, one can argue that the Indians in America are far more smarter, of course, but we still have Saurabh Bhai, Sunil Bhai, Madhu Bhai here. So talent is not the only issue. One can argue that Indians in America are hardworking, but even we also work hard. How many of you stay in Andheri West? Every day when you have to cross flyover, you can imagine how much hard work we do. So what kept Indians behind in India compared to America? One can argue infrastructure. When you go to American cities, you find infrastructure. In India, it was missing. But anyone who visits American airport versus Indian airport will now say that our infrastructure is catching up. So hopefully that gap will be narrowed down. The real issue is encouraging entrepreneurship, having ease of doing business. That's where Silicon Valley and US scores over India. Hopefully, policy making now will improve. The ease of doing business has increased, but it will one day reach American level. One day, Indians in India will deliver as much performance as Indians in America. That's our potential. We could be 50 times bigger than what we are today. If all of us get the same environment we are getting in America.
So that's a challenge. What's the opportunity in this? I'm just trying to understand. Do you look at the natural progression as the opportunity, or do you believe there are things happening within which you spot it?
Neeraj bhai, in the rising tide, every boat will get lifted.
Okay.
All you have to ensure is that you are not sitting in a boat which has a hole in it. Otherwise, that will sink. The opportunity is for us not to score self-goal. In the past also, this equation was valid. But we have the ability to snatch defeat from the jaws of victory. as long as we don't score self-goals and we continue to encourage entrepreneurship, the rising tide will lift. Now, whether it grows 5 times or 50 times, it will all depend upon us.
Okay, well, so on that note, and now feel free to just come in for on the answers given by the fellow panelists as well. But Sunil, rising tide carrying all boats, there is merit to that argument because India is favorably placed geopolitically as well. When you think about the opportunity size and what is the biggest gains, or what will be the first amongst equals, how do you kind of separate the wheat from the chaff, or how do you decide what will be the first amongst the equals?
Why do you want to be even doing that? I think the whole economy is growing. And, I always see India to be, to some extent, like US, have presence across sectors. So we are not like Brazil, which is only in commodities, or Russia, which used to be only oil and gas, or China, which is now completely government owned. Even the digital companies are government owned. I think in India, we have presence across sectors. We have great financial services companies, IT, pharma, infrastructure, cement, steel. And this is a country which has grown because of entrepreneurs. Government at best, if it doesn't interfere, it is fine. But it is basically the entrepreneurial spirit which has led to India growing even in 22 at 7% when the world was struggling to grow even 0%. So I think in India, yes, there are always going to be challenges, and the challenges also become opportunities, right? The good thing is that, challenges will remain, but a lot of these challenges are being addressed very decisively. So digitization has not only led to efficiency, it has led to, a lot of cleaning of the system in terms of more transparency. We have tax collection which has gone up 20%, not because the country grew at 20%, but because now there is more transparency and very limited opportunity for someone to not, basically heed to the laws of the land. And as I said, consumption, obviously, there is huge opportunity, but consumption does not only mean the staples or the discretionary consumption. Consumption also means, there is now, I would say, residents and population demands that they want good infrastructure. Yes, that demand is a little slow to fulfill, but we have now more airports, more people are flying on a daily basis. 4.5 lakh Indians are flying, which is significantly higher than even the pre-COVID levels. I and Madhu went in Vande Bharat a few days back. We were pleasantly surprised by the efficiency of the train and the comfort also. So roads are pretty much there. I have heard someone who went to Shirdi that once you cross Bhiwandi, reaching Shirdi is like a breeze in that new Samriddhi, road. So across efficiencies are increasing. So I think, without trying to say that this is the first opportunity and this is the second opportunity, I think there are opportunities everywhere.
Okay, but I would still love to understand, Sunil, so here's the deal, right? Everybody's got a limited wallet. So when you try and think of what opportunities could do really well versus what opportunities which could do well, but maybe not as well.
From an investment perspective.
Or just from the growth perspective.
Three of us are here, why do you need to do it on your own?
That's true.
We'll take care of that.
You don't take a small amount, Sunil. That's the problem.
I think let me take this, Neeraj. I think Sunil is absolutely right. The country is getting joined up. When we see other countries that have got network, right? Better roads, better planes, high-speed broadband. Typically, when you join up a country, what happens is the chota local business, that guy suffers. Because as you network a country the size of India, the world's 5th largest economy, the local player, the regional player, then has to face up to the national giant, right? And we are seeing that consolidation of profitability in our country. When I migrated to this country in 2008, the 20 largest listed companies accounted for barely 25% of the country's profits. Today, the 20 largest listed companies account for 80% of the nation's profits. Right? The largest listed company now, HDFC Bank, that alone accounts for 8-9% of the nation's profits. Right? So this polarization of profitability has many different layers to it. At the stock market layer, perhaps the easiest layer to think about is the stock market layer. For people like us, it sort of makes our life a little harder. Unless you're able to back the industry leader, right? Whether that's in a big industry like banking or in a small industry like emulsifiers, you have to work hard to back the industry leader. But if you want to think about it at the nationwide scale, millions of smaller businesses who used to have a nice living because the country wasn't networked, they will now have to reconsider their options. This is how countries develop. This is how America developed. This is how Japan developed. This is how Korea developed. This is economic development. You transfer productive resources from lots of chota low productivity firms to giant, efficient, highly automated, well-capitalized enterprises. I think that's a change we will go through. People like us will try to make money from it, but at a human level, for SMEs, it's a challenge that they will have to face.
You agree with this, Nilesh? I mean, just trying to understand, would the large become larger, and is that the opportunity per se, independent of which theme it might be? Just trying to understand that.
So absolutely, big will become bigger, but that doesn't mean that small has to die. The small has to innovate. So if you remember, some time back, big bazaar kind of shops came which were retailing food grains and vegetables and so on and so forth. And everyone was worried that the Kachi Karyana guy in Mumbai will die. What did they do? They consolidated their purchases. They improved their distribution system. You can ask for a 10 rupee toothpaste and he'll deliver. And today, both of them are prospering. The same thing happened in Morbi in tiles industry. People leveraged the raw material which was available in Than and focused on quality, focused on designing. And today, Morbi is competing and dominating tiles industry in Southeast Asia. We were worried that Chinese tiles will come and destroy us. Now Morbi is exporting not only to Middle East, but also to Europe. So big will become bigger, undoubtedly for reasons which Sunil and Saurabh mentioned. But the small guys who are innovative, small guys who are able to reinvent themselves, like Morbi tile manufacturers, like Mumbai's Kachi Karyana shops, they will all survive and prosper and participate in India growth story.
Sunil, any word here?
No, I think, see, in any economy, globally also, if you see, yes, there is definitely consolidation, but businesses survive. And if you actually look at, some of the smaller companies, and both listed and unlisted, if you look at the entrepreneurs, I think the Josh is phenomenal. And it's not only that Josh, now they have access to capital, which was not the case 20, 25 years back. To raise 1 crore, 2 crore of equity was impossible. Now any of these HNIs would get 10, 20 crores just seeing the presentation. And the other thing is, the uniqueness of businesses have also come up dramatically. The businesses which we never thought would exist, those businesses are coming up. And third most important thing is these young guys now have world-class education. So earlier when, kids used to go abroad, 99% of them used to go abroad with the thought process that they want a good job and they would settle here. Now maybe 20, 30, 40% are coming back.
Sure.
And I think that is what is adding. That's why I said, India is a country which grows because of entrepreneurs. And I think these small businesses do add. I think the ecosystem is good. As I said, the capital is available. And for us to reach from 3 to 6, 7, 8, 10 trillion, it's not only going to be the large companies, but also the smaller companies. The other thing which we also have to realize is that, Saurabh mentioned about HDFC Bank. HDFC Bank makes 8-9% of the total profit pool because of those small businesses. HDFC is not into corporate lending. They are into SME lending. They are into retail lending. And I think this whole ecosystem somehow gets captured and there is opportunity for everyone.
Okay. And, it's interesting because just before the event, Saurabh was telling me about how, without getting an exact number, but a sizable proportion of their inflows into their funds comes from smaller towns. So there is money out there. Our next panel has Sanjeev Sharma of ABB, and he was telling me, Neeraj, sorry, but I don't come to Mumbai because most of the time I'm traveling to tier 3, tier 4 places because that's where the real activity seems to be happening. So as much as I'm a Mumbarkan, I love the
No,
city.
no, 100%.
But-
I think, when I was in Reliance, we were in mass retail. When I started Abakkus 5 years back, we started meeting investors. And I can tell you very clearly, the number of wealthy people in India is much more than any numbers can present or what any of us can imagine. And the kind of wealth which people have is again something which is unimaginable. And more importantly, now you have liquidity events. Some companies are getting listed, some are exiting, some are doing something. So wealth is there everywhere.
Okay. Now, before I throw the floor open for questions, I would, because this is a crowd and the viewers which are all into the investing, the business of investing, let me just try and see and ask you guys, how are you trying? I know Sunil said that why choose the first amongst equals, but hey, that's my job. So I'm still trying to do that. And I'm trying to understand when you think not just the next 1-2 years, but let's say the coming decade or the next 7 years, right? What is that one opportunity that you think is top of mind for you? It could be an investment opportunity. It could be something that's happening in a particular sector that people should take notice of, irrespective of the listed investments or no out there. Saurabh, I'll start with you on this.
I mean, look, just like positive change of the sort we've been discussing creates opportunities, negative change also creates opportunities. And I think one aspect of negative change we all have to recognize is that climate change is upon us, right? So every year we go through the cycle, we get very hot summers, and then we get floods in a specific part of the country. And that is something that we are thinking quite deeply about as to how does it become an opportunity. Now, I've tried with my colleagues to look for plays in the water sector, right? So far, we haven't been able to find listed plays on water, but increasingly I'm thinking that the best play on water perhaps will be food, because water scarcity most naturally turns into challenges in the food sector. Water scarcity has lots of implications, but one specific implication will be the cost of food. And that's something that we're trying to think through as to how do we turn that into an opportunity. It's going to be a problem the world over. So the country I migrated to India from, Britain, water scarcity is becoming a problem there as well, right? You would think, rain stops cricket match in England is the most common thing, but even in the UK, water scarcity is becoming a problem. Most of our cities in India, we are using water which is actually from the water table. Mumbai is an exception, but cities like Bangalore, cities like Delhi, most of the water is actually water drawn from the water table. And as we deplete that, that becomes an issue, and the translation of that into food prices is something we're trying to think through as an opportunity.
Okay. Thank you for that, Saurabh. Right.
So if you look at IT industry, it has created a lot of big businesses, a lot of value. What was IT industry in maybe 2003, 2004 is where healthcare industry is today. About 1/3 of doctors in America and UK are made in India origin. 45% of medicine consumed by volume in US is made in India. Today, if you want American visa, wait period is probably 2 years. But if you are a nurse, then American Consular General will be happy to come to your home and deliver the visa. And most importantly, the cost of healthcare delivery. A simple root canal for a friend of mine, for his daughter, in NHS in UK was 6 months wait period for a root canal. In private, after paying £1,500 was 2 months. ये फ्रेंड ने सीधा अपनी बेटी को ये कहा, बेटा प्लेन ले लो, यहाँ पे आ जाओ, यहाँ पे रात को 12 बजे आपकी रूट कैनल में करा सकता हूँ. And it happened probably at 10,000, 12,000 rupees. Now the world is aging. There's no doubt about it. The lifespan is increasing, no doubt about it. And most of the healthcare plans are unfunded. What will world require? They will require a healthcare company from India which will provide solutions through medical professionals, through medicines. And like we have seen IT industry in India, which is on-site as well as off-site, and which provides competitive solution to the world. The same thing will happen in healthcare industry. The world will require Indian healthcare companies to succeed so that they can live longer. तो पुण्य का काम करेंगे तो पैसा भी बन ही जाएगा.
Sure. On that thought, Sunil.
No, I will again go back to where I started from. So if you have 50 crores of people who can afford things going to 100 crores and the super rich multiplying 5x in the next 7-8 years, 5x, I think discretionary consumption is the place to be. And I'm not talking about consumer like, the staples. There's already penetration. But the discretionary spend, I think it will surprise all of us. If you look at the size of the largest garment company, the largest shoe company, the largest XYZ company in India, I think it would be the smallest company in the US in that segment. The size would be that much. And as I said, you don't have to do any significant research. You just go and see what is the largest company in any consumption play in China or US or some of the other countries, and what is the size of the largest company in India, you will get the answer. We have 140 crore people. The largest sanitary ware company is not even 1,000 crores in sales. So I think the size of opportunity in the discretionary consumption side is going to be huge. Obviously, India is a very difficult market to make money. What is good is very expensive, including ABV is sitting here. So I think there is opportunities, as I said, across. But since you said only one opportunity,
You can give us 3, not a problem. But
no, that I started with.
Yeah,
The market is the opportunity.
Market is the opportunity.
But this is very clearly visible. I remember when I was young, we used to get 2 shirts during Diwali. And we were 3 brothers, so most of the time the shirts were the same, from the same cloth. Now we buy shirts on the go. I'm just giving you a perspective.
Yeah.
We used to have 1 shoes. Shadi mein bhi wahi, office mein bhi wahi, kidhar bhi jana wahi shoes. Now we have, different outfits for different occasion, different shoes for different occasion. I think the whole consumerism is going to drive, and beyond a point, I think people have started to spend. That is a fact of life. So it's a multi-year opportunity. Obviously, buying the shares at the right valuation is a challenge, but if that is one opportunity, I think that is going to be the opportunity.
Yeah, there are young girls in my office who buy clothes to match the shoes. I mean, I used to do it the other way around. Now even that is happening. So yeah, quite stunning. Okay, so a natural India progression, a China +1, which could actually play into India's hands, and within India as well, the buying power of a larger populace moving up, which could also be. So that sums up to my mind the thoughts of the big India opportunity that exists here. But as I think both Nilesh and Sunil had once told me that if you look at social media currently, or just look at media at large, the number of people who are doing some extremely strong and powerful research is very high. And this is not just fringe players. There are people who actually do deep research and give out stuff on media. So everybody knows the data, and a bunch of the people who are out here on the crowd as well, some of that crowd. So maybe we can have a few questions if the crowd wants to ask. Paucity of time, about 5 minutes. If people have a question for any of our guests, please raise their hands and maybe just stand up and ask your question. We'll have about 5 minutes for this. Anybody? I mean, I have a bunch of questions, but I've saved 5 minutes for the audience if they want to ask.
Hi.
Okay.
This is Varsha from BQ Prime.
Okay, Varsha, you... Okay, fine. Chalo, quick question, Varsha. And then we'll get the other audience.
So since China is opening up, so how it will impact Indian economy, especially chemical sector per se?
Who's your question directed to, Varsha?
Anybody can answer.
Okay, anybody wants to take it?
I think China's opening up after COVID. Is that what you're referring to?
Yeah, so now since China has been dumping products, so there's been headwinds in the chemical industry due to...
I think China's been open from COVID for a year or so. The challenge for China is that they've gone after their own entrepreneurial class. What we used to do in India in the 70s and 80s, China is doing, right? By going after Jack Ma, by going after the tech entrepreneurs, they've scared away venture capital money. They've demoralized their own entrepreneurs. Secondly, by taking a belligerent attitude vis-a-vis the Western world, specifically America, they have made sure that America and the West have stopped exporting to China critical products for the tech sector. That's going to send China's tech sector backwards very quickly. That same belligerence has resulted in people like Tim Cook coming to India and saying that a quarter of Apple's smartphone production is going to move to India. That same belligerence is resulting in Western pharma companies who buy something like $200 billion worth of active pharmaceutical ingredients from China, saying that they want to reduce their dependence in China. So China's problem is not the COVID opening up of lack thereof. I mean, they've been open for a while. They are committing what we did in the 70s and 80s, which is show aggression vis-a-vis the Western world, persecute your entrepreneurs. That's the surest way to kill a booming economy.
Okay, the gentleman here and then the gentleman in the third row. Yes, please. Siddharth, sorry, but we'll have to stick to one question, please.
Then I'll keep it for Saurabh. Saurabh, you mentioned a negative change, which can be an opportunity, that's climate change. But I just wanted your views on the fact that wouldn't climate change also mean destruction of overall value, like in cases of, say, high case of flooding or rise in the water level, might have actually major detrimental effects on the Indian growth story that we have, given that we have such a huge coastline. So what are your views on that?
I think, look, climate change globally will have myriad effects. I'm not so sure I'm the right person to understand those. In the limited context of my investment activities, in the limited context of what I do, our job is to look for opportunities from climate change. Specifically, the water aspect is becoming very clear. I think most people in this room know that cities like Bangalore, states like Karnataka and Tamil Nadu tend to take a very belligerent attitude vis-a-vis each other on water. So water scarcity and the impact on food is something that we're trying to see if we can turn that into an opportunity. Climate change is a massive subject. You've got experts who are trying to figure out how that will impact the world. I don't think I can even begin to understand the pros and cons of the broader issue.
Thank you.
Yeah, Nandan, sure. And then the gentleman on the fourth row.
Yeah, hi. Is it on?
Yes, it is.
So major risks over the next 10 years. And the last 2 years, apart from Ukraine and therefore China +1, consumption has been stagnant. These two things.
Sorry?
Sorry, what was the question, Nandan? Sorry.
Yeah, major risks, market risks over the next 5-10 years, given what you've just said. And in the backdrop of the fact, in the last 1 year, apart from Ukraine and therefore China +1 and so on, consumption story has been there, but consumption has been very weak.
So major risks to the market and then the consumption story.
So Nandan, consumption has been showing K-shaped movement. You and I are consuming more than COVID, and it's visible. But our driver, our mates, our accountant, our pune, our watchman, they are not consuming as much as before. Well, there are multiple reasons which have come together to do that. Some of the factors which are responsible for lower consumption, and there is no right or wrong answer, this is just my analysis. One, the gaming, used to take money from poor people and give it to the upper middle class to rich people. That amount is anywhere between 1 lakh to 1,20,000 crore. F&O trading, post-COVID, a lot of people came into F&O trading. By anecdotal experience, we knew that only people in Kailas Plaza were making money and outside were losing money. For those of you who don't know what Kailas Plaza is, it's one shopping center in Ghatkopar. It has more turnover than many of the states put together, like UP, Rajasthan, Jharkhand, Chhattisgarh, and so on and so forth. Now, SEBI research has confirmed that 89% of people, when they trade in F&O, lose money. That number could be easily between 50 to 75,000 crore. The third is your EMI. Interest rates have gone up. In many cases, like housing loan, tenure has been extended. But in many cases, like personal loan, repricing has been done. Collectively, would they have taken away anywhere between 50,000 crore to 1,50,000 crore? If not from cash flow point of view, at least from a psychology point of view. Look at rentals. The rich guys own flat and the middle income or poor people stay in those flats. Rental costs are up 20%. On a 6 lakh crore rental market, that's 1,20,000 crore grown from the pocket of poor to the rich. There are multiple such reasons why consumption at the bottom end of pyramid is not growing. Now, one solution was to capture China plus one opportunity. And here we have made a beginning, but the job creation is more in casual and contractual workers than in permanent employees. So we have a challenge of consumption, but hopefully, slowly and steadily, we will find solutions to all these things, which is hurting consumption at the bottom of pyramid, and things will start improving over a period of time.
Okay, I hope that gives you an answer. Then, yes, please.
One last.
Sorry, so, and then the last question there, please. But yes, please.
My question is to Mr. Nilesh Shah, and you were talking about a self-goal. Unless we do a self-goal, then there is a lot of opportunity. And one self-goal that as India, our political system, that the way it is happening, which is visible from the last two elections in Punjab and Karnataka, is in terms of luring voters through freebies. Already India is spending a lot of money in terms of social welfare schemes, be it free food to the needy people and other things. But on top of it, we now have freebies, which is swinging the whole electorate mandate, which one doesn't really know on what footing calculation the freebies are being offered. Now, this is something that can put a major dent in our financial system, the government's kitty. Now, this is factored, and what is, since especially you also are there in the Prime Minister's Economic Advisory Committee, I just wanted to know whether this has caught attention and whether there is something that you think is a challenge that we would see going forward.
Your point is absolutely valid. We have seen what freebies culture can do to an economy like Venezuela. They have more oil reserves than Saudi Arabia, probably less population than Saudi Arabia. And in about 2 decades, they have grown to a poorest nation on earth. That was all Hugo Chavez's freebie culture. As I mentioned, we should not score self-goal. And one big fear for India is how do we maintain balance between inclusive growth, where everyone gets roti, kapda, makan, and at the same time not spoil the culture where people don't have to work. Do we have to give some subsidies for roti, kapda, makan? Answer is yes. We can't have a social stability unless until everyone is having food and some amount of clothing and some amount of shelter. But then when do we don't cross Lakshman Rekha? In Ramayana, we have seen when even Sita Mata crossed Lakshman Rekha, there was problem. We have to maintain our Lakshman Rekha. I hope and pray that as voters, we will ensure that Lakshman Rekha on our politicians. What we have seen in the past, many politicians have walked left and talked right. They have repackaged existing freebies to show as if they are doing something new. Let's hope and pray that our politicians' ability to walk left and talk right and our voters' ability to enforce Lakshman Rekha will help us from not scoring a self-goal.
Thank you. Sorry, last question because the guest has to leave and the next panel is waiting.
Yeah.
Yes, please.
So this question is to Saurabh ji. That this is big India opportunity. That is the investment thesis. As an investor, what could be the top 3 antithesis which we as an investor should keep track? If at all, if a low probability, if it triggers, then entire thesis can go down the drain.
Top 3
antithesis.
Antithesis, okay. Now, look, I think the first thing to look out for is tax policies, right? Nilesh bhai talks about self-goals. Every time the budget comes around, I kind of hope and pray the government doesn't do anything on tax policies with the retrograde. I have to confess the TCS thing worries me a lot. I mean, they pushed it out to, I think, 7th October or something. They pushed out the TCS ramp up to October, but it just doesn't feel very comfortable that when you travel abroad, or you invest abroad, you'll pay 20% TCS. Now, thankfully, TCS is a modest outlay, but when the next election, post-election budget, July 2024 comes around, I think we should look out for the tax piece, right? Because GST is such a game changer, GST leaves so little for the tax department to do, you worry whether they carry on sort of doing TCS plus. The second thing I would say look out for is the K-shaped recovery in a way is one manifestation of the fact that the north and the south of the country are pulling in divergent directions. The south is booming, it will do even better in the years to come. It's not just IT services, it's manufacturing of electronics, chemicals, pharma. The whole piece is around Chennai, Hosur, Pune, Maharashtra, Gujarat to some extent will also do well. I'm not so sure what exactly will happen in the north, which is going to give north that level of prosperity. So, what does it do to India's future economic cohesion is something that I think we need to look at quite carefully. And the third antithesis is just the sheer amount of foreign money I think that's going to come towards India. My reading is we're going to be inundated by foreign flows over the next 2 to 3 years. Foreigners have 3.5 trillion, FPIs have 3.5 trillion invested in China. Their Chinese investments 10-year CAGR would be 3 or 4% in dollar terms. FPIs have 0.6 trillion invested in India. One sixth of their China corpus is the Indian investment. The Nifty itself dollar return would be 10-year dollar return would be 11-12%. On top of that, the growing escalation of hostilities between America and China. I think we've got a classic recipe for a FPI-driven bull market and potentially a bubble in the next couple of years. So that's something we need to look out for carefully. If you get the bubble and the tax policies become little difficult and the South booms economically, whilst the North doesn't, you've got a combination of risks that could be quite tricky to deal with.
Great. Thank you. So Sunil, a quick 30 seconds, risks that you believe, Nandan had a question on risks as well. Anything that stands out top of mind as a risk? This is the last question on the panel.
I think 24 elections are there. Obviously, it's going to be something which is going to be very eagerly watched. And the other thing, at least my experience, Neeraj, over the last 25, 30 years is that big corrections in the markets have happened on events which we never anticipated. So whether it was COVID or Russia, Ukraine or something. So I think risks, if any, we don't know as yet.
Sure. Okay. Gentlemen, Nilesh bhai, Saurabh, Sunil, thank you so much for taking the time out and being with us. A round of applause for gauging the India opportunity. Thank you. Thanks for inviting us. Thank you so much.
You've seen the story. But it is once again very clearly beginning to fire on all cylinders. To give you a few numbers, 21% was the growth in the last financial year in Capex. It could hit 8.5 lakh crore in this financial year. And unlike instances in the past, where you've seen frenetic growth at the cost of stability, this time around, it seems to be a more measured, responsible growth by India Inc. Now, to talk about the differences between this cycle that we're seeing and what we saw in the first decade of this century, our next panel is going to very nicely, I think, elucidate this point. Please join me in welcoming on stage Sanjeev Sharma, the country head and managing editor, or rather country managing editor of ABB India, and veteran investor Madhusudan Kela. We've got Sajit Manga, who is executive editor at BQ Prime, moderating this event. Put your hands together, ladies and gentlemen, for what will be a very, very interesting panel. One more time, please. Put your hands together, please.
Thank you, Alex, for the introduction. Let me start off straight with the question, since Alex has already spoken about some of the numbers there. One of the reports said that the capex in FY23 was around 7.5 lakh crores, which came in, and it's a 21% jump. Now, there is a view on the street that this capex is similar to 2003 to 2008, and it's a beginning of that kind of that cycle. Madhu, I want to start with you first. How do you see this capex cycle going, and is it similar to the 2003 2008 cycle?
First of all, thank you for having me. I would say this cycle will surely be better than what we experienced between 2003 and 2008. And I would emphasize that qualitatively, this cycle will be better. Because if you, going by the history, if you saw the kind of capex which was being funded, there was clearly exuberance at that time. The lending was very easy, capital availability was phenomenal, capital markets were doing well, and you have seen what kind of NPLs happened post that capex cycle between 2013-14 and right up to 2018-19, right? So even though quantitatively you could relate, but qualitatively this capex cycle will be far superior. And there is data point. If you look at, any capex cycle actually requires 4 C's. First, capacity utilization. Second, cost of capital. Third, capital availability. And fourth, confidence. If you look at it, India has done remarkably well in the last 4-5 years to get all of this together. So I feel very optimistic. And this time around, there are stark differences between the capex cycle this time and the one which you are alluding to. Like at that time, private sector effectively was leading. So 70% of the capex at that time happened from private sector and 30% was government. This time around, it is exactly opposite. 70% is contributed by the government and private sector is still lagging. Let me give you one data point, which while I was reading. The best way to look at is, the capex cycle is what is the depreciation to your overall asset. So that is still 1.6%, the depreciation being provided. In the peak, it was 7.5%. So still there is a long way, as I would see. I am very sure a private sector capex in times to come will start to reflect the solidarity which I am talking about.
Sanjeev, you've been traveling across the country. You're present across segments. Are you seeing that pickup of capex coming in, especially from the private sector? As Madhu said, 70% coming from PSUs, 30% from private sector. But now we are seeing, the pickup of private sector capex coming in. And do you see this as a broad-based capex cycle which is coming in? Any geographies where we are seeing this capex building up?
Oh, first of all, thanks for having me. And I agree with Madhu. 20 years back, the capex cycle that we had, it had very different construct, both globally as well as what happened in India. But right now, if you see the conditions that existed at that time, they are absolutely different, both geographically, also what's happening in India. Now, India, if you really see the markets, earlier, say 20 years back, there would be only 4 or 5 segments which used to drive the capex, and that too in very large projects. And as Madhu mentioned that, those used to go in power, steel, and some large, core sector projects, and they resulted in NPAs later on. But now, we are looking at, from our perspective, we are looking at about 23, 24 market segments, which are very wide and deep across the geography of the country. And some of them are the companies which are listed, but a lot of businesses are happening in the private side. And they don't necessarily need not be very large, but there are the size, the number is quite high. So you can see the distribution of investment is across the geography in tier 1, tier 2, tier 3 cities.
And if you look at the players who are involved in the capex, is there a differentiation in terms of the capex being brought on by the players vis-a-vis what we saw in 2003, 2008? What kind of players are now looking at capex?
So the construct has changed, as we said. See, in 2003, around that time, you'll see we had the 3G launched, and everybody was talking about a killer application they require on the phone before 3G can be relevant for the people. Everybody was very excited. But that means that time the digital era was not there. So we never used to talk about large data centers at that time, because Google and Facebook types of the services were just they were just forming, and internet was in its nascent stage. But now what you can see is the data center, for example, globally as well as now in India, is scaling up. So that's a new segment in itself. And last 2022, I think we have put together data centers worth close to 650 megawatt. You put another 1 year, it becomes 1300 megawatt. So that's a kind of a multiplier effect you have. And if you take it forward 2030, you will have $23 billion invested only in the data center as an investment space. And that's perhaps the biggest real estate game in the town. So that's one construct, and there are many other segments as well.
Madhu, you agree with that? The construct of the capex and the players have changed and the sectors have changed?
Clearly,
and is it sustainable?
Clearly, that's what I was mentioning. Last time, maybe the private sector was leading, and within the private sector, 60% of the capex were done by the top 10 corporate houses. But if you see today, that number is maybe merely like 35%, which is constituted by top 10 corporate players. Also, there are a lot of new sectors which have come up, and also it is happening because of disruption. Like, take for instance, clean energy. That was only a word 20 years back.
Yeah.
Today, clean energy is reality. We can't, the fact that we face such enormous heat in this season itself is clearly indicating that what is the times to come, what kind of global warming we are going to have. So the clean energy, now you and I can't even estimate what kind of capex will be required. But what we are able to see in the ground, right? Everyone, and these are power plants. When we were doing in the last cycle, a power plant took 6-7 years because we are doing a thermal way. Today you can make a power plant in 6 months. Like if you do solar or if you do wind, you can actually start producing power in 6 months. So there, like Mr. Sharma spoke about data center. So I think the capex is extremely broad-based, and it is also happening because of the disruption which is happening around the world and specifically in India.
Sanjeev, if you look at the trends here, there is a capex which is coming towards the energy transition, right? Means that's what what Madhu is also indicating towards. So energy transition capex is going to be the bigger play going forward.
It is. Since you started with the premise of comparing 20 years back. So what was happening 20 years back was in Qatar, state of Qatar, massive capacity for gas was being put in place. UAE, Saudi, and you go to different parts of the world, a lot of investments were taking in the oil and gas projects. And that time about $9 trillion, and you had that as the energy play at that time. Now the same companies, the large oil and gas companies, because of this climate action and the sustainability demanded by the investors, the core of their strategy is energy transition. So whatever cash flows they are generating, half of it gets allocated for maintaining the assets they have in the fossil fuel side, and rest of it gets allocated on the energy transition. So we want to move away from the fossil side, want to get into the renewable power side, which could be the generating energy with wind, solar, and also getting into the electric vehicle space, so that they want to make sure they are the drivers in the energy transition. And these are the large companies, and they have a lot of cash flows because the fossil fuel is still generating a lot of cash flows, and those are getting transmitted into the transition, in the energy transition space.
Are you seeing the cash flows getting, used up for energy transition in India as well, in that sense?
Oh, clearly, you can see the largest players in the oil and gas space. They have declared very large ambitions on the renewable side. So that speaks for it.
Madhu, g- you're wearing an investment hat. Tell me opportunities which are there to play in this capex cycle and how you play that opportunity.
It's a buffer out there. You have to choose. As my guru and mentor used to tell, that it's a buffet out there. You eat whatever you can digest, but just remember, you don't overeat it. So I think there are plethora of ways by which you can play this. My favorite theme is obviously the infrastructure side of capex and also this China plus one. Given that the PLI, in my opinion, when we talk maybe 10, 15 years down the line, would have been the biggest game changer for India. Because what people are not realizing, by giving maybe 3 lakh crore rupees of PLI incentive spread over 14, 15 sectors, the government will generate 60 lakh crore rupees of revenue in this time frame, right? If you calculate GST on that 60 lakh crores, whatever number which you want to assume, it will be multiple of what they're actually being able to give. Forget the income tax, forget the benefit which will get by job creation and all. And this will enable that the lot of industries which were kind of uncompetitive in India, let's say mobile manufacturing.
Yeah.
In the earlier panel it was being spoken. Now the EBITDA margin typically for a mobile manufacturer in China is 3%, right? Here if you're giving 5% incentive on the top line, of course I will be competitive, right? So the PLI change itself is going to be a big thing to watch for. So manufacturing, which is specifically China plus one, and infrastructure-led capex.
How do you look at the companies going for capex from a balance sheet point of view? If I were to compare from a 2003-2008 period to now, how are Indian companies placed with respect to balance sheet?
Phenomenally well. That again, taking a data point, the peak of debt to equity, I'm saying 2010 something, it was 85%. Today that number is 54%, right? So corporate in India, when we are also talking to people across, obviously through our investment we talk, corporates in India have significantly deleveraged. और मैं आपको बोलता हूँ आजकल लोन लेने वाले को लोन देने वाले से ज्यादा डर है, बिकॉज इतने सारे लोग जेल में चले गए ना, देने वाले भी और लेने वाले भी. So that whole culture, in my opinion, has changed. Borrowers have become far more responsible than at least what I have seen in my career. Even when I go to Delhi and meet real estate players, they also want to be debt free. So obviously corporate balance sheets have improved very, very meaningfully in the last 10 years. The banking balance sheets have improved. When did you hear a public sector bank has provided 75% of their gross NPL as provision coverage? I've never seen these numbers in my career. So both bank, household, as well as the corporate balance sheet are in a far better shape, according to me, than it has ever been. Forget the last cycle.
Sanjeev, you interact with many companies across sectors. Do you concur with what Madhu is saying? That balance sheet is not an issue at this point in time, and it's more, the direction which they want to put the capex.
Yeah, I think that's true because it also reflects in your receivables, right? Earlier, the receivable cycles used to be very long. Whether now it's a small player or it's a medium-sized player or a large player, when you deliver your services and products, you get paid on time. So that shows in your cash flows and the receivable cycles.
And for a change, even government is paying on time.
Absolutely.
Good. And you see a lot of small and medium enterprises now getting involved in this kind of capex?
They are. You should know that underlying, there are two types of capex which is visible. One is the so-called motherhead plants, wherein some integration takes place. But then you have a lot of value chain providers who provide the machinery, equipment into these things. Earlier, what used to happen, say many years ago, a lot of stuff used to get imported as a full machine. Now what you have is that our entrepreneurs in the tier 2, tier 3 cities, they have absorbed those technologies and they have a capacity and capabilities with the younger generation to put those things together and also put quite a bit of digitalization on it. So quite a few sophisticated machines are now built here, which used to be imported. So quite a bit of value chain, which was imported, has spread into the manufacturing sector or in the private sector. So that again is another area where the new market has formed.
And you see that more often in tier 2, 3, and 4 tier cities where this kind of innovation or this kind of expenditure is happening.
Yes, I think cities like Mumbai, Chennai, you do have large corporates who could do the capital allocations into large plants and large capex. But then it makes sense to be present in tier 2, tier 3 cities because the cost of land, cost of setting it up, cost of what you pay to the labor, cost what you pay to the white collar job is much more competitive in those areas. So people are smart. I think that's how they are setting themselves up. And more people who have good corporate experiences, they have started their own jobs. People are doing the integration jobs, which used to be earlier you had to get the experts from overseas. So all this value added is getting done inside the country.
Are you seeing larger players moving to these cities because of the cost involved to reduce the cost and get more productive?
So larger players always moved where the raw materials were there. So you may have an office in a large city, but you always go where it's easy to bring the raw materials and also easy to send those finished goods out, and you have the access to the labor. So yeah, I think that keeps happening. Yes.
Madhu, one of the big sectors is transportation. We've seen a huge capex coming into the transportation sector there. How do you see this picking up, and the kind of opportunity that exists for investors in this sector?
So even within transportation, there are three sectors which are doing exceedingly well compared to past. One is road. Second is railways, which is massive increase which we have seen in the last few years in the railway budget, in the kind of spending which is happening. And third is aviation. The last week only I was reading the number. I didn't understand what kind of jump we are talking, the number of planes which will be required, the number of airports which will be required, the number of passengers which will travel. It's just a spreadsheet right now, but it looks with the economy it will grow. I would like to talk more empathetically about railways. The remarkable change, as Sunil was saying, I couldn't believe, I felt so proud as an Indian traveling in the Vande Bharat train. We went from here to Surat, absolutely neat, clean, phenomenal service, very good bathrooms. You could not, I could not imagine that it is Indian Railways, right? And we are talking about they being rolling out 1,000 or 2,000 such trains over the next 10, 12 years. So the amount of money which will be required to do this will see massive amount of capex even within railways to happen.
Sanjeev, that's a sector that you are very well into. How do you see that capex translating into opportunities for companies like you?
I think railway, they are getting started now because their ability to absorb new technology and willingness to absorb new technology and experiment with new technology, I think that has given a lot of confidence not only to them, but also all the partners in private sector supporting them. And they're giving them a lot of flexibility to participate in building the railway network, be it moving away from diesel locomotives to complete electrification. So that itself has been quite a large capex by railways. Then putting new trains on it, then the air freight, the freight corridors. So you can see that the backbone of India is being rebuilt in terms of how the freight will move in future, and also how people will move from, say, shorter distances where the planes are not so efficient to fly. So I think that journey has started, and that confidence in, without importing technology, putting it together here and attracting the best of global technology and using the best of local players to put them together is happening. And we are seeing those numbers in our books. And you can see that whatever was the diesel side of the business, that has gone down, but on the electrification side, it has ramped up.
I was about to come to the electrification journey that we are taking, which is taking place in the transportation sector. You think it's a huge one, finally moving to passenger cars as well?
So I think electrification journey, as I said, if you are in Europe, Central Europe, by default, people take train to travel 4 or 5 hours distance. So I think this railways, the new railways, as Madhu said about Vande Bharat, people will take these short distances by these trains as you put 4 or 5 years and more trains on it, and then longer distances will be the place. Now, when it comes to electrification and the EV side of it, that's another story which is developing. You can very clearly see that on the two-wheeler side, that transition has taken quite quickly. Three-wheeler side also, I think quite a good movement is there. And especially when you have the fleets wherein you have, say, the cars which are provided as taxi service. I think there again the pickup is very good. Like say you have a service in New Delhi called Blue Smart, which is dedicated as an EV player, and they offer very good services and they are ramping up. But when it comes to passenger cars, I think that will require public infrastructure to do the charging. We are in that charging space. We can see movement is taking place there, but I think it will be a journey to be done in that area.
How, what kind of opportunity you see, Madhu, in that electrification journey, especially in the cars and auto space?
No, it's not yet begun, Sanjeev. I think in the amount of combustion vehicles which needs to be replaced by electric vehicles, and as it again comes to that point of carbon neutrality, it's not a choice anymore. It's by compulsion that you have to do it, or it will get done. Right. So if you see yourself, when you even go in a city like Mumbai, how many cars can you identify which are electric vehicle and how many cars are the old combustion vehicles? The answer is in front of you that, I can't even identify one car out of 100 which are like electric vehicle. So agar ye Mumbai ka haal hai, so you go to any smaller city. So it is just beginning, really long way to go, and there will be various ways to play it in the stock market, and not a lot of listed companies which are there right now, but I am sure a lot of companies which are either ancillary or into battery or into electric vehicle, a lot of variety of companies will come.
You spoke about the battery and you spoke about data centers as a new area. Battery storage is something which is emerging. How big an opportunity is it?
So one has to, before we size up an opportunity, you have to look into the underlying trend, which I think is being driven in India and by the Indian government. We want to move away from fossil fuels, right? That's the underlying trend, because 85% of the fossil fuels are imported, and we don't want to keep shipping money to other countries to import our energy. So I think that's one. Energy transition is being at the core of whatever is happening in this space. So what's happening is then the renewable energy, I think we have made quite a leap in that area, especially in the solar energy, followed by wind and hydel, and also now the hydrogen is on the experimental stage. That if you really successfully execute over a period of time, your dependency on the fossil fuel goes. Railways moving away from diesel engine and having the electric locos and electrification all across, again goes in that direction. So electric vehicles is again part of the same equation. Now, when it comes to batteries, the renewables are available, solar, especially during the day. So what you need to do over a period of time, not only provide batteries in the EV vehicles, but also spread those batteries across the grid, so that when the renewables are generating energy, you are able to store that energy for the night, and you put it into the grid. If there is a deficiency of the power, these batteries can back them up. So it's not only the EV side, but also the battery storage is going to be a big segment and quite a significant segment in future. So different components will play for the energy security. You will have solar, wind, hydro, then you have the battery storage and hydrogen. They will play a mix so that they can have a significant impact on dampening down the fossil fuel, and also same thing is connected into the sustainability strategy, whatever is agreed in the COP 26 and the commitments we have made to reduce the GHG emissions in the country. Yeah.
But are you seeing an ecosystem getting built, or is it on a nascent stage at this point?
So some of them are at a good maturity curve, and many technologies are being experimented across the globe. So you should know, not everything has been solved even in the West, who are far ahead of us in experimenting. Not everything has been resolved. It will be a period of transition, and I think one should recognize it. One should not have a knee-jerk reaction. Some countries in Europe has done that. They have moved too quickly for energy transition, especially when you have the gas supplies stopped out of Russia into Europe. You can see some of them have been exposed because their energy transition was not so well handled. So I think India will do well to really take a period of time and really find its foot firmly on the ground and have this transition take place for the society. So it will be good for in terms of what kind of foreign exchange we spend, and also it will be good that will be more self-sufficient in creating our energy security.
If I may add,
Yeah.
sometimes being slow
Helps.
and being late also helps.
True. Sanjeev, I was reading some data points that the infra spending is happening, but within the infra spending, household infra spending is taking a big leap, or the growth is much more faster. And can you give us some idea of how it's moving, and especially automation and household technology, which is playing a big role in this household infra spending?
So I would say in the infrastructure space and also in industries, one new big theme is, apart from energy transition, energy efficiency is a big theme. Because I think one data point is that anything that we produce in this country, it uses 30% more energy relative to some other places. So that means the component that we use to convert the grid energy into machine energy, I think we are not using efficient components. So that's one large space, be it how the energy efficient motors, the drives, and also the automation of the buildings that we do. You should know that about 70% of the buildings which will exist in 2030 are yet to be built. So if you continue to build the buildings the way you do today, potentially you will use more energy. But if you use automation and do a lot of sensorization in that building, one is it will be much more better for the humans, but at the same time, it can consume 30% less energy. So that's another area of transition which is happening on the commercial side of the buildings as well as on the residential side of the building.
Madhu, what kind of multiplier effect it can have?
You can see the multiplier, whether you see the demand of steel, or you see the demand of cement, or whether you see the demand in the digital side. I think that is very, very clearly visible, because the Capex in that sense is the biggest multiplier for the economy. So when you build a road, you just don't build a road. You consume cement, you consume steel, you employ people who in turn go and spend. So that, I think, that's how the whole economy actually gets momentum. And I just like to revisit my point that even if you are comparing yourself to 2004 and 2008-9 cycle, we have just begun. And qualitatively, this cycle, in my opinion, will be far more superior than what we experienced in any cycle in India in terms of Capex.
One question that comes to mind is basically the cost of capital, right? How do you see cost of capital at this point in time as compared to 2004, 2008? And do you see we are a better place in terms of cost of capital if we are going to empower?
The weighted average, to begin with, it looks good, because we have seen possibly worst of inflation. We have seen possibly worst of global events also vis-a-vis inflation, right? And the bond yields are still only 7.5%. If you see what happened in 2000, after the 2008, they went berserk. The inflation went berserk. So in the beginning of the cycle itself, we are seeing maybe interest rate might have peaked out at 25 basis here or there. The second is weighted average cost of capital. If you see, weighted average cost of capital is cheaper as compared with the last cycle also, because obviously the equity valuations are clearly more expensive than what they were in the last cycle. So I think considering that the capacity utilization in a lot of industries are at 75, 80, 85%, 0.25% interest rate will not matter here or there. But I think availability of capital and the cost of capital both are favorable for a Capex cycle.
And capital is much more available now.
Available, of course. And from multiple sources.
Sanjeev, do you see that on the boardroom, you see more discussion on the quality of capex and the returns now as compared to earlier?
Well, I think as Madhu said, there's much more responsibility in terms of how the capital is being deployed. And also there's a lot of pre-testing done before the capital is being deployed, whether you are going to really make it in that project. So there's much more safeguards. Now, when it comes to the companies, it's very clear that, our balance sheets are good. A lot of companies are debt free. They have good cash on the balance sheet. Now what they will do? Now as the capacity utilization goes up, given the economy is doing well, one is that you will have the organic expansion of the, your factories, as well as more money spent on the productivity measures on the existing factories will take place. And plus, when the consolidation takes place in certain market segment and certain product segment, naturally you can utilize capital to bring more, the inorganic, inputs to your portfolio by bolting on some new technology. It could come from startups. It could come from some other companies who can add value. So that's what the discussions are at the board level, how to use capital in different ways.
And do you see it redefining capacity, supply chains, because those are some of the key words today used in all boardrooms, especially supply chain, global supply chains. Do you think that supply chain is getting reorganized in a way through this capex?
It is. I think given what has happened in recent past, 20 years ago, I think everything was going in one direction. One country stepped up and kind of really became the supply chain supplier of the world. But now I think it's on the reverse cycle. Everybody is onshoring and everybody is doing friendly shoring. So in the sense, you've got to be friends of the large markets. And if you do that, then naturally you get a lot of benefit of supply chain being built into your own shores.
How does that translate into economic gains? We are a $3 trillion economy. By 2030, is there a roadmap for us to reach 7 through this capex cycle?
I think so, and we've been all India bulls, very, very bullish on the economy as well as on the markets over a period of time. So I think whether it reaches on 2030 or 31 or maybe 29, we don't know. But clearly we are headed in that direction, whether 1 year here or there. But let me know, because we are all from the stock market. Let me put, everyone is very bullish, and so am I, more bullish than we have ever been. But let's not forget, when you are investing in the markets, make sure that you are doing your homework properly, because we are all talking from a 3, 5, 10-year perspective.
Yes.
Markets open up every day for 6 hours and there are fluctuations, there is volatility, right? So you need to be cognizant as to what you are paying and what you are buying. One thing which I don't agree, that there are so many opportunities that you will go and buy anything, you will make money. You might make money, but you might not make optical money, which is there in the market. So in this market, I think I can see clearly there is some exuberance which is there in some pockets, including some few things which are even related to Capex. So what I am trying to say, if you have a 10-year horizon, then you possibly can ignore this. But most people may not have 10-year horizon. So you possibly need to make sure that if you are a professional investor, don't just go by market, don't have that left out feeling that, if I don't buy this today, things will run out. The markets always give a chance. It's very, very important than ever before to be disciplined. You should be fully invested, you should be buying companies, but you should be very disciplined about what you are buying and what kind of work which you are doing.
Sanjeev, before I open it up for the audience, is this going to be a 4 to 5 year cycle, or is it a much more sustained and long-term cycle?
I believe the components which are playing out, they are multi-decadal cycle. So it's not a 5-year cycle, 7-year cycle. So you should look at this as a 10, 20, 30-year cycle. I think if you on a relative scale, you on the GDP comparison, you see we are 15 years behind China. But given the decision making that that was prevalent at that time in China, maybe you should give another discount of 5 years. So you say we're 20 years behind where they were. And I think if we continue to execute, continue to invest capital at scale, and at the same time bring new technology, adapt new technology, new productivity measures, and continue to have these larger themes like energy transition, manufacturing, going for scale in the area which really matters to the world as well as to your own energy as well as electronic security for the future. I think we play that and keep stable policy around it and incentive. I think it's a multi-decadal cycle in my view.
We'll just open it up for a few questions.
That's the headline. That's the headline for the show.
That's true.
Check. Okay, so Sajid has asked a lot of questions and I think that it covers quite a bit. So we have room for a couple of questions and then the coffee is getting cold. So I want to push you guys out there.
Yeah, this is a question to the, Madhu sir. Just, from your last comment about some of the pockets where there is an exuberance about in terms of Capex cycle. So as per your view, which are the sectors which you feel, where condition of oversupply can come soon?
So I would not like to name a particular sector because I am saying that even within sectors which are doing well, there is a possibility that there might be a little bit of exuberance, and where the markets are, that there is a possibility that exuberance may develop. So what do? Do you stay away from the whole market? I am saying no. You must be fully invested even in this market. Maybe today, for instance, large caps are offering better opportunity than some of the small and mid cap peers up there. If you just look at the share valuation and the growth opportunity and the risk reward, some of the large cap companies might be more favorably placed in the same sector. So we have seen in the past also, the real returns are made not only by identifying a sector, but actually buying the right company within the sector. Right? So I am just saying, as the market goes to newer highs, and this is happening like every day, we should not just say India's story is phenomenal and I just go and buy anything and I can make the kind of returns which I made in the last 2-3 years. That will be the unreasonable approach.
We have room for one more question, please.
Yeah, thank you. Thank you so much for providing me an opportunity. So my question is, going forward, you have talked about how railway capex, the road capex, roads being built, Vande Bharat trains coming into the picture in India. But on the other side, we have incidents like rail tragedy happening very recently, where even the basic security systems were not in place. On the road side, we have very good expressways connecting cities. But if we look within the city, the highways in Mumbai, traffic comes to a standstill every monsoon. So India, with the aim to cover up the speed, is it going from second gear to fifth gear directly, rather than bringing a foundation in place, moving slowly, go to the fourth gear and then maybe to the fifth gear? So do you see this as a risk coming out in future, in the coming years, where because the foundation is not in place, it might come back to hurt us 5 years down the line? So what are your thoughts?
And it brings in opportunity for companies like you as well.
Well, infrastructure is the arteries and veins of any economy. So that has to be in place. So there's no doubt about it. But at the same time, let me quote it with my experience. I used to work quite a bit in Southeast Asia, Japan and China. And I take myself back in 1999 in China. If you go to cities which are really booming now, there used to be nothing. Right? But then what happens is over a period of time, they build themselves up. Now, right now, India has a tendency to struggle with something for a period of time and then it takes off. If you go in mid-90s, we used to struggle with our airports. We never thought that, we'll build good airports and we will have not a meaningful infrastructure. But once we built one airport with the private participation, we got the model right and it started scaling up inside the country. 20 years back, we did the metro in New Delhi. Now there are 18 cities which are building metros to move people around. Now, same thing if you really look into the railways, I think the modernization is taking place. Central government has figured out how to get the land acquisition and make these expressways. which are of the same standard as you find in Europe in terms of how the build is being done.
In some cases, better.
Better. And I think, and it's a pleasure to be on there. But still, it is at the starting time. But when it comes to the city infrastructure, I think it has developed themselves organically. Probably nothing against Mumbai or Chennai or Bangalore. I think maybe we have enough land in this country. We should build some new cities with better infrastructure and allow people from small towns to migrate there and find the work close to where their hometowns are, rather than everybody has to move to larger cities. And I believe with this interconnectivity of railways, highways taking place, probably the pressure should be less on these large cities, and the Indian economy should grow in the midpoints and on the tier 2, tier 3 cities of today and become much larger in future. And I think in China, if you see, that's what happened. There are a lot of large size in the cities which came up, which were not there 20, 25 years back.
You want to conclude?
No, I just want to say that, in a country which is 142 crore people, in such a vast country, if you just want to pick up a few instances and make a case, that is not the right way to look at it. If you attempt to do 10 things, any human being or any government, there will be one or two things which will be missing. So just to directly answering his question, I don't think that we need to slow down or we need to moderate, rather we need to accelerate because of the same reasons what he mentioned, that if there is still accidents happening, then we need to possibly upgrade our railway systems much faster than what we have done in the past. So I would say that, just to conclude on this session, that we are at the cusp of, as Mr. Sharma rightly said, a multi-decadal opportunity, even in the Capex sector, aided by absolutely right policy by the government, which we spoke, one such initiative as PLI and India manufacturing. So this opportunity is here and it is just beginning.
Gentlemen, thank you very much for joining us today and giving your insights. Thank you.
Thank you.
Thank you very much. Thank you.
This is how you can transact. And Sajit, who moderated the previous session, I sent 30 rupees to him and I sent him a collect request and he hasn't yet sent that money back. But then we didn't know at the time that that was the springboard and events would conspire to reach or to create a digital payment network that would reach every nook and corner of this country. And it's changed the way that people transact, the way that people do business. That was a mega trend. This next panel is going to be talking about the mega trends that are developing as we speak right now. And catching those early, of course, is the best way to participate in the India growth story. Please join me in welcoming S. Naren, CIO at ICICI Prudential AMC, and Sailash Bhan, the CIO, Equity Investments at Nippon India Mutual Fund. And to moderate this session, we have BQ Prime's editor, Muralidhar Swaminathan.
Check, check. Is the mic fine? Can I start? Okay. Okay. Naren, Sailash, welcome again. It's wonderful that I have the opportunity to talk to two of the best fund managers, among the best fund managers in India. On behalf of all the mutual fund investors in the country, I think I should thank you also on my own behalf for helping create wealth and meeting the aspirations of lakhs of people in this country. Let me go straight to the context. The way we live, the way we eat, the way we spend money, the way we dress, and the way we spend time keeps on changing almost every 2 years, 3 years, 5 years as we grow older. But that becomes a trend. Now that trend captures multiple things, identifying those trends and trying to convert them into opportunities is a big challenge and which we generally tend to miss. Over the last 10 to 15 years, I'll focus on 3 trends that I have noticed which have transformed our country, our businesses, our investment, and our lifestyle also. First of the list is financial inclusion. The second is housing, and the third being cars. All 3 seem to fall into place, and everything has sprung out of these 3. The financial inclusion, the housing. Once you have a house, then you need everything inside the house, and once you have a car, your aspirations keep growing. Mobility, mobiles, everything comes into play. Now that's for the last 10 to 15 years, maybe even longer for that matter. That's in the past. There are some trends which are of short-term nature. They are mini trends. They will disappear after some time. There are really mega trends which last very long duration. It could last for years. It could last for decades. Now, some of these trends could be positive. Some could be negative. Some trends really don't translate really. It might be good for the economy. It might be good for the country, but it may not translate into good profits. It may not translate into investments. But here we will try and focus on those that benefit the economy, benefit the people, and therefore the investments. So let me toss to the experts straight away. Open-ended question. One of you can start. What do you think are the key mega trends that we are witnessing now?
See, I think, like you said, many things are changing, right? I mean, so you get those large opportunities which are present today. A lot of them, if you ignore the shorter term trends, I think a lot of them are maybe it will last for 10, 15, 20 years. So let us take the most simplest of those is the demographics piece which is there. So it's well understood and known that India is a country of young people. It's actually over-marketed in that context. But one trend is India also has the largest or the second largest cohort of 50 plus people. And 50 plus, I think most of us in the room here, a lot of people in the room here, I think is a sizable market. So we never say India is a country of old people, right? But we say Germany is a country of old people. So Germany has just 3.7 crore people over the age of 50. Today we have about 30 crore people over the age of 50. And this will be 40. And this is the fastest growing cohort because the younger people are growing at 1.2, 1.3%. This is growing at 3.5%, 4% a year because of longevity and things like that. And all of this needs servicing, support, whether it is, leave aside the medical side of it as well, but several other services required to take care of this kind of a large population which is there. This leads into the retirement opportunity. This leads into many, many such opportunities which are there. And this is less today in a way, it's not at top of the mind anyway today,
right?
Which can possibly be one of the biggest surprises you can find. The rest of the others, manufacturing, for example, for the first time in the last 20, 30 years, we are seeing something really happening to the scale. We think, we would have always wanted to happen in India. So if manufacturing doesn't take off this time around for some challenge somewhere, I don't think we will possibly miss this big opportunity again. So that's one very, very large space and trend available because at this scale, we can't live by imports. That's again happening. Second, third, in addition to this, you have, in the sense of the basic mutual fund industry itself, right? Even today, whatever we talk about, we are a large industry, XYZ, but today, just about 3 to 4% of India really invests. And this can easily be 10, 12% in a meaningful decade or so. That's the third biggest piece which is there. And I think everything is there, zero friction now, established product now, and savings are there to be invested in. And hence, it's again a very, very large opportunity. So I think in India, the beauty is you look left, right, there is an opportunity waiting to be capitalized upon. It's just the time frame and obviously the execution to win it.
Absolutely. Okay, so I will take off from where he left and toss the question to you. Demographic dividend, that dividend is something which could come in 5 years, 10 years, 15 years. So the focus is on consumption, therefore. Consumption of whatever, services, housing, cars, mobile phones, the case may be. So we have a situation where demand creates its own supply in our country, I suppose. So how do you look at these trends and let's say focus sharper on key trends that we need to latch on?
Actually, this demographic trend itself, take for example these global capability centers which were created by the companies. In last year when oil went to $100, $120, as usual, people like us started to worry about current account deficit and trade deficit and various things. So what we ignored was that there was so much of global capability centers that were created. So we went and asked a few. So what happened is after around July, August, September, we saw services export booming. So we asked a few people what was happening. So we asked an engineering company, very respected engineering company from Germany, why is this services export booming? So that company, which has its headquarters in Germany and a big manufacturing base near Bangalore, said, if I need 15,000 engineers, where do I go to come to India? So they have as many employees in India as they have in Germany. And it's not part of the Indian listed entity because they basically support engineering services of the German company. So then we asked a US bank, a US, one of the biggest US bank. So they said the same thing. We've got more than 20,000 people in India today. We have to keep on hiring because it is much what happened because of COVID, they said was it became even more easier that we realized that a lot of things could be done online, a lot of things could be done through Zoom, Teams, online. So we actually shifted much more of our work out of US. Anyway, in US, people don't go to offices. So we said we can do it out of India much more efficiently, and they moved many of their work out of to India. So this services export boom completely kind of resolved the current account deficit. That if you see the recent data of current account deficit, the whole issue has almost disappeared, even though oil was high.
Right.
And what happens to all this is all these people, they are all well employed, so they cause their own consumption, and that gives their own benefits. So this is the side effect of demographics. Why did that happen? If you ask me, it is because engineering colleges got set up way back in 90s. When those engineering colleges were set up, we ourselves didn't know whether all the people who came out of engineering colleges will get jobs. But that caused its own positive setup after the IT boom of 2000. IT boom resulted in an outsourcing boom. Then it became easier to actually outsource. Then now with Zoom, Team, this, that, it became very easy to do things. So we ourselves are not sometimes able to judge. So asking somebody recently, why are some costs in India going up? They said today you can do yoga in the Hong Kong teachers. There are people in India teaching people in Hong Kong yoga because you can teach yoga from India easily through Zoom and Zoom today. So it seems the cost of teaching yoga has gone up because there are teachers in India who teach people in Hong Kong yoga. There are people who teach in US yoga from India. So this kind of trend also starts happening, and we can't predict what is the side effect of some of the innovations. And that is the interesting thing. On the other hand, as someone was pointing out about Sajid's payment, you would have thought that this is something which is a massive money-making opportunity, payments. But what the Indian government, along with lot of well-minded people did from Bangalore, was they made it free. So what happened as a result of that was there was no money-making opportunity in payment. So who's the gainer? All the people in India.
Correct. Yeah.
But who's the loser? There is no trillion-dollar company which got created in the PE industry which is based on payment.
Right.
All the companies which are created for payments had to move to loans because what they did through the stack which was created, I think, by many people from Bangalore was they made payments free. due to which you and I are gaining. But there is no money to be made in payments. They have to make it only through loans. So what was very easy to create maybe $100 billion profit-making company turned out to be not profit-making because the government worked beautifully through NPCI and created a setup where no one could make money. So sometimes innovations need not make money, but the social good of payments in India is so phenomenal that you can't measure it in the form of the fact that people have not made money out of payments. Has there been an innovation? Certainly. Has India gained out of it? Yes. Have we created PE-based startups in payment? Answer is no.
Yeah, absolutely. In fact, so technology, income and technology and policy, of course, all three go together in creating, let's say, incomes for the poorest of the poor. UPI, as you said, the payment system, it's enabled the smallest of the vendor to earn more than what they used to, let's say, 10 years back. Mere paas chutta nahi hai, so they would run around. So that is translating into some kind of income level. Now, the next question then is, for that class of income class of people, they are moving up gradually, and the payment system is helping them move up faster, and technology is helping them realize their skills. You can sit here and say, look, if there is a simple problem, I will guide you, you can solve that problem, like as in yoga. So how do we harness that to the next level?
See, interestingly, the whole middle India or that scale of India, I think it's gradually every last 20 years we have seen some percentage always moving towards better income levels and all. What technology has done is that it's actually allowed all of these services, all of these segments of the market to offer services across the board. So the limitations have reduced, the friction has reduced. Collection, the biggest problem in this country was collecting money after offering a service. That has eased off because of all these things. And this has provided them, if you have talent, capability, you now have a platform to get the services delivered and earn money. This has created, see, no single company or the government can create enough jobs for India. It is just not possible, right? But this has created enough and more, I would say, trickle down of the money made by the top 10, 15% in this country who want to take all these services, and it's exploded downstream. And I think as people get more and more used to this, and I think technology is there everywhere, I think it's a movement. It's not a small selective change which is happening. It's a movement in upgrading to what it is. Second, aspirations also, right? People have seen everything. Today, everything is available. What you know today, in 10 minutes is known to everybody in every corner of this country. Right? So I think that arbitrage, the information gap which used to be there, I think is completely vanished. So that is also getting them on reasonably good platforms. Education, though we have been hearing so much about online education companies and whatever is happening there. But the beauty is it's now today I have access to the best of the best teachers in 90% of the times free on YouTube, which never was the case when we were graduating. So there is so much and more happening there. And this will all enable faster and faster growth. So it's no longer that you're looking at some large 10,000 crore investment which is going to give jobs and things like that. So there is a large, I would say, underlying economy functioning on its own. Right. And there are enough tools and this technology which is enabling them. Like Naren said, we don't know how this will shape up, right, over the next few years. But I think it's giving incomes, it's creating markets. And I think as we normalize, in the sense we still have some COVID impact in terms of income and savings losses, as we normalize, things should get better.
Okay, so on the point of aspirations, let me bring back the conversation to a slightly sharper focus. Do you think housing is still a mega trend and it will continue for a very longer period of time as it has happened over the last 10 years?
No, it's not an ordinary mega trend. It's going to be it has to be an extraordinary mega trend. Housing and urbanization has to be an extraordinary mega trend in India. And if you look at China, the level of housing and urbanization which has happened there, it's just so substantial. The housing stock that they've created over the last few decades is phenomenal. I think we are going to create that kind of housing, And India only has to create it because today we are the people who have the demographics which require it. So it's a trend which has to be created, and there is need for much more supply side practices across, and that I think has to happen across the country. That people have to work to creating that supply side practices. I think there have been areas where the supply side practices have worked very, very well. To take, for example, Indian IT industry, we managed to create an industry where supply side practice to be able to put large number of people into projects happened smoothly. So if you look at it like that, we need to have a situation in India also. We need to measure ourselves by the number of houses that we need to build. Even in a place like any city in India should start getting measured by the amount of square feet and the number of pakka houses that got built.
Right.
We don't see that at this point of time. The good thing is that way, for example, in areas like renewable energy, there has been, which is also part of a mega trend, there has been much more effort to create scale. And we've been using government has pushed everybody, thanks to the climate change mega trend, to creating scale there and pushing everybody to create enough renewable energy. On housing and urbanization, the same level of support is required so that we are actually measuring each state by the amount of housing it's created. If today someone were to ask me which is the city where maximum amount of houses have been created of around 500 square feet houses, I would tell you I don't even know. Because frankly, there's no data available and no state or anyone would be able to tell you. Whereas if you ask me how much of solar energy projects have been started in different states, I'm sure in the next 12 hours I'll be able to find out and tell you. So I think it's very important. Housing and urbanization is a mega trend, but people have not had supply side initiatives. There is, in fact, if you talk to most people across the country, people will tell you there are so many bottlenecks in creating supply. And because it's not a central subject, it's a state subject. And as a state subject, it's a state subject, it's a municipal subject. So there have been a lot of challenges in so many places in creating supply. We have to do something that what China did, creating supply. The same thing has to be done in India.
Right. So very clearly extraordinary mega trend, as you put it. We all know that housing is a huge opportunity, and a house creates demand for several things. But the focus and the concentration is in few geographies. The NCR region in the north, the Mumbai region here, and the Bangalore region. Outside of that, you can't think of really making money there. So a mega trend should also help you make investment opportunity, but everything is concentrated in 3 regions. Your thoughts?
I think this was correct 10 years back.
Okay.
I think there are big changes underlying which we are unable to fathom today, right? When you look at data trends which are there, proxy data of where vehicles are being sold or where lot of spaces are appearing. For example, the state of UP, the kind of growth it has seen in the last several years has been stunning. So I think it's now become more a bottom-up kind of a country in the context that maybe you have 100 cities functioning well and growing rapidly versus earlier, 10 years back, which used to be just these 3-4 cities which account. It may still be that these cities account for a large proportion of it, but I think growth is in the second tier, third tier cities which are exploding rapidly. For example, recently I was in Hyderabad, and every time you go, it's completely new landscape on the new side of the city. Just you're seeing as if the best of the best office infrastructure being built, the largest of companies each company having 15,000 people, many such companies they're having that. And things are changing, thanks to the IT trend, thanks to everything. So I think it's no longer the narrow India which used to be, and hence, always used to struggle wherever there was some growth. We always had those bottlenecks and problems. I think it's now spreading out.
It's also because data is not clearly available from these two cities. But the other trend that I've seen, or more anecdotal, I would say, I don't know whether it's a trend, the premium housing is selling like hotcakes. day one sold out. Day one sold out. I can take a few examples. DLF is a classic example. On day one, it got sold out. Recently, Max Ventures, 7 crore to 13 crores was the kind of budget for a house. And just a year back, Prestige in Bangalore, they came up with a 180-acre large mega house. The day after it opened, everything was sold out. Now that's yet another trend happening where the aspiration level is rising. But then there is a clear divide there also.
No, I think without affordable housing going up, it's not a mega trend. If you're going to construct 1 lakh houses of people who consume at the prices you talked about, then it's not a mega trend, then it's a micro trend. So I would say that...
But money is in micro trend. From investors' point of view.
Yeah. So I think it's going to happen. In fact, if you see on the lending side, we see so many players who come to me and Sailash and say we're starting an affordable housing finance company. So it would be very surprising that, it's happening. What you read in the newspapers, because see, what attracts media attention is not the houses which sell for 20 lakh rupees. But I believe if I look at the number of players who come to us in the mutual fund industry and talk about affordable housing, I believe that there's a lot of activity happening. And in between, there was a lot of subsidy also given. I don't know whether the subsidy is still on for affordable housing, but there was a subsidy given by the government that had given a huge fillip to affordable housing. Actually, about 3-4 years back. I'm not very sure whether that continues at this point of time. And that subsidy actually had given a huge fillip to affordable housing about 4-5 years back. In between, stamp duty stoppage had also done. So all those things, I don't think it is what is getting reported, what you're talking about is one trend, but it is a broad-based trend. And as Sailash pointed out, you may be looking at a few cities, but there is fair amount of real estate activity across. And the best indicator for that is cement demand. If you look at cement demand in the first quarter of this year, in April to June, it has been extremely buoyant. And it has been extremely buoyant across the country. So which is a sign that construction activity has been booming across the country. And it is not a price-based boom, it is a volume-based boom. So I believe that there is a clear situation where that construction activity is booming across the country, and it is not localized to Gurgaon or Noida or Bombay or anything. I think Pune must be booming even more than Bombay at this
point. Pune has been. Okay, so that brings me back to a very important trend that you alluded to. We'll have houses, we will need electricity, we will need to run ACs, the heaters, and as we progress. So energy is going to be a very critical, and of course, the mobility for the cars we need. We have plenty of sunshine, we have plenty of wind. So there is always that opportunity of renewables. Is that going to be a extraordinary mega trend? Say 5 years from now or 10 years from now, would refineries be out of my portfolio?
See, it's happening as we speak, like in the previous session it was said, Europe tried to adapt it to a fairly early in the cycle, either gas or even solar. They all set up at extremely high prices. My belief in any mega trend, it's that economics of that business have to start happening. There'll be support, external support and things like that. But when economics are right, today solar power technically is cheaper. You can create it in shorter cycles. You don't have the challenges of the past. You don't have environmental challenges beyond what we've seen before, not to that extent. And the pricing is right. You can supply at 2, 2.5, or maybe 3 rupees at least during the day. When that happens, nothing can stop the trend from accelerating. So everything is a tipping point. So the tipping point of mobile in terms of pricing, then it's already 80, 100 crore people having that. So I think that has happened for solar. Then there is this pressure. In addition to that, there is this climate change effort globally to make it happen, less carbon everywhere. And that is feeding a lot of capital into this. So economics are right. There is a need to do it. There is a lot of commitment globally to do it. Leaders see it as
what they would want to leave as a legacy to the world. I think there's nothing, in all these five things coming together, it's a trend which should, in my opinion, continue. And interestingly, the amount of capital that goes into it is generally 2-3 times the amount of capital that goes into traditional coal plants for the same amount of power produced.
Right.
So that again means large investment, then modernization everywhere. So I think in all probability, this is a trend we will possibly see accelerating rather than slowing down.
So what kind of investments that would dot the portfolios, let's say, over the next 10 years? Now, for example, let me go back, in the late 70s and early 80s, nobody would have thought about HDFC being in my portfolio or your portfolio. Now see how it's changed over the last 45. So the next 10-15 years, what will be the key? It might be a very small company. It may be a small cap, for example. It could be a smart meter company, for instance. That's now coming up. So what is it that will change, and what will it that, as some of the best fund managers in this country, which you will buy and say, I'll keep it for you, they invest?
Just to add to what Sailash said, when this solar came up, we used to think, what will you do about power demand at this time of the day? Because solar is not going to supply power at this time of the day. At point of time, the only thing was lithium. And lithium is not available in India. So we used to worry a lot 3 years back. Actually, in my childhood, I used to go to a place because my grandmother used to stay. And there was a power plant called Kadambare Pumped Storage Plant, which was a pump storage plant where, there was a height. And I knew that pump storage was used for peaking power. I never knew that pump storage could be done with much, not necessarily with a big height difference. But suddenly about a year back, what I realized is the government did superb work on this area and came up with a view that along with solar, you have to add pump storage. And if you do solar plus pump storage, you can solve the problem. You don't need lithium battery to the same extent.
Okay.
So frankly, this whole concept for 3 years, we spent worrying in our company, how will you handle power demand between 6 p.m. and 8 p.m.? Because battery costs are so high and India does not have lithium like Chile or Australia. But the problem is more or less getting reduced by this pump storage idea. And today the government is actually moving very, very fast on the pump storage. And if pump storage can be a solution, we would have a situation where we would have solar, we would have wind, and we would have pump storage as a solution. So to the question you asked, finally we are public market investors.
Correct.
We have to look after investors' return. So if you'd asked me 10 years back, what was, the first time I got an iPad, I thought that telecom will be the best investment opportunity in the world. But you know what happened to telecom for the first 6 years? Telecom was the biggest negative return generator as a sector. So sometimes what happens is you and I will think this is a beautiful innovation. For 6 years, telecom changed my life, both iPad and my mobile phone. Yeah. But what was the equity market return for the first 6 years? Negative. It's only in the last 4 or 5 years I got the return. So I believe, sometimes innovation and stock market returns are not necessarily linked. The returns came from all the consumption stocks. But the returns didn't come from telecom. Whereas people who set up e-commerce websites, they made money.
Yes.
But the telecom companies, if you go back 10 years back, how many telecom companies are there? 2 or 3.
Correct.
2 have succeeded. 1 is barely surviving. That is the reality of the situation.
Which is the case with aviation
as well. So sometimes what happens, we'll think of the innovation. Finally, who makes the money? Who survives? Who makes mega money?
Yeah.
These are all difficult things. And finally, we are managing public money.
Yeah.
If we are going to lose money for the investor, that person will take out money from us. So we actually have to think who will make money in the next 2 to 3 years, rather than who will make money in the next 10 years.
10 years. Okay.
That is only for Warren Buffett's of the world.
Right. Okay. So,
one just
yeah,
point
you would.
to this. See, we are looking at future trends to come and things like that. But existing underlying large trends, which have already established businesses, we have this at the back of our mind that large companies cannot become larger. Only smaller companies can, find or become, grow much faster and grow for longer periods of time, or will catch a trend. I think some of the mid-sized businesses in India today themselves, right, are very much capable to latch on to any of these larger trends which are available. So I think 80-90% of the winners can still come from companies who are already there, already existing, already profitable, and have managements to capture some of these trends. And the chance or the risk of identifying trends for the next 10 years with smaller, early stage or venture capital kind of businesses, what's happened and that phase.
Okay, one very important mega trend. My last question before I toss to the audience for questions. One, I would call it a mega trend. Maybe you are experts, is that a lot of people, a lot of investors are pouring money into small caps. So much so that small cap fund managers have to every now and then stop the flow. Now, that itself looks like a mega trend. The thinking has changed. One of you could take the question and conclude this before we.
So I define markets into 5 phases. I call it bust. Bust happens when Lehman happened, World Trade Center happened, okay, COVID happened. That's the best time to invest, if you have the guts to invest.
Absolutely, yeah.
The second is best. That is when there's no such crisis, but markets are basically in bad shape. That's the best time to invest, by the way. Third is boring, where there's no problem, but not too much FII buying, not too much mutual fund buying. Fourth is boom. What's happening today in small cap and mid cap. What we have seen is in boom phase, if you have invested, you normally don't make money in the medium term. We have seen boom phases like 2006 to 8, 2017, all these phases, 1999. In these phases, you invest, you don't make money in the medium term. But the problem for people like us is near term, you may make money. Because there were people who are negative in 2007 January. But 2007 to January to 2008 January, the market kept shooting up. So in the near term, market can go up as much as it wants to. And you are not capable of determining that. So in boom market, you are capable, the medium term is the problem. Short term market may go up. And long term, India is a good structural story. And normally people don't hold till long term when they invest in a boom market. That also I know. The last phase is a bubble phase.
Bubble phase, yes.
In the bubble phase, whoever invests will lose money.
Are we in that phase?
We are in boom phase.
We are in boom phase. Okay.
We are in boom phase. In bubble phase, what happens? Market narrows. Then there'll be only few stocks which go up. So today we are in boom phase in small cap and mid cap. We are not in boom phase in large cap or multi cap or flexi cap. We are in boom phase in small cap and mid cap. So this is a tough task for us to explain to all the investors.
Your concluding remarks before I toss it.
See, these phases will come. They've come every 2 years, every 3 years. There's no respect for risk, and you see people just putting money based on what last 3-year returns are. Our basic thing is when 3-4-year returns are very good, you have to be extremely careful. So that's what is happening today in, say, small cap, where returns have been extremely good in the last 3-4 years. And today, this perception of large caps being, slow growth businesses, blah, blah, nobody wants to put it, or it's not fashionable, has made them attractive. So I think as rational investors, some allocation changes in this kind of a framework would just allow us to sustain and capture wherever respective or relative value lies.
Wonderful. We can throw open the question session to audience. Please keep your questions short.
My question is to do on the credit cycle. So as we know that the corporate balance sheets have been highly deleveraged, around 0.5% debt to equity. So are you seeing the re-leveraging cycle play out, and how big is that cycle for the banks? Because generally credit growth is at 1.25 to 1.5x of nominal GDP for good lenders. So is that a mega trend as well?
One of you can take it.
I think basically our view is that the corporate sector is in extremely good shape. 2010 to 2010 years, the corporates took to clean up their balance sheets. So now the corporate sector is in extremely good shape. Is it a mega trend? It's a cycle. It's more than a mega trend, it's a cycle. Currently, the corporate part of the credit cycle is in extremely good shape. They need to leverage. And like the previous thing, I think the opportunity sometimes comes on the Capex side, because I think there is no sign of any bad debt on the corporate side of the balance sheet. And maybe there is a possibility of a Capex cycle like what came out in the previous panel also. And that's how we look at it. And that's why that side of the balance sheet, we spent 10 years cleaning up. The problems actually were based on loans given in 2007. The loans, the final bad debts got resolved in 2020. But right now things are pretty fine.
Just a small point to this. We are today at a leverage level of what we were in 2003 and 4. So we are back 20 years because 10 years people didn't invest or didn't have the balance sheets to invest.
Hi, sir. When we talk about infrastructure development, it's all about speed also, because from a 12, 14 kilometers per day, now we have achieved 30 plus. So I think the speed is a factor where we see lots of infrastructure development happening. Now coming back to housing, again, it's a problem of execution that, you start building homes, affordable house, and then it takes lots of time. Now my question is that with the advent of 3D printing, which like L&T sometime back, they tested a 3D printed post office in 7 days. So does this 3D printing will bring a mega trend or game changer for construction industry?
See, this 3D printing first came 15 years back. On an economist, there was in 2007, right? So it is useful for very niche areas. I don't think it's mainstream today. The economics are mainstream. Today, the existing construction technology, in every 15 days now, you can have one floor of a high-level building constructed. So it's not a problem. No, technology is not a problem. The constraints are somewhere else, boss. The constraints are land-related problems, title issues. Constraints are lack of local municipal permissions which are there, or just the younger entrepreneurs or entrepreneurs in the real estate side having challenges in terms of managing their cash flows and money. Also, housing is also cyclical in the context that if you create excessive capacity and people are running, you have a weaker cycle around that, you end up not being able to finance or not being able to do. In Bombay, for example, 10 years has been that, right? It's more about, so it's not about technology or the pace of construction. Technology has improved tremendously in the last 10, 15, 20 years. So it's more about the other aspects of the real estate or housing, which is what is the problem.
Okay. Okay. One last question. Gentlemen.
Hi, am I audible? Hi. Good evening. I'm Alok. I represent a boutique wealth management company called Equentis. Quick question, Mr. Muralidharan. I was actually wanting you to maybe pose this question, but unfortunately it didn't come out. Thank you for all the micro and mega trends. All of us sitting in this room ultimately would want a mega trend that would enable more and more participation in markets so that we get more customers, right? I just want to understand that what are those enablers? I mean, we've moved from 4 crore demat accounts to maybe 11 crore demat accounts, but the category penetration is still at, say, 7-8%. We being a savings economy versus US being a consumption economy, still we are at 7-8%. So until unless all of us sitting in this room get more people to participate in the markets, these trends will be trends for just a niche segment. So any thoughts on enablers for getting in more people in market, hand-holding them probably, or what are your thoughts on that?
I guess the mutual fund industry is doing a wonderful job of getting many people to come to the markets. I think I'll leave it to the experts to.
See, I think as a mutual fund industry, having been in it for 19 years, initially we started off by being on the retail side, just equity. From equity, we moved much more into categories like balanced advantage, moved much more to selling SIPs. Today, we try our best to recommend categories like multi-asset. If you look at the number of product categories we have created in different product categories we have created, then in the associate industries, the AIFs have created many such things. So, I think between SIPs and categories like balanced advantage and systematic transfer plans and categories like multi-asset, I think fair amount of market development has happened to reach that, increase the market participation. Then it's left to people like you and the digital platforms and the entire digital ecosystem to take it from where we are to now. I think the challenge today when we look at the data is the number of people who pay income tax in India, the number of people who earn income above a certain amount in India. That itself is a challenge in India, if you ask me. That's what the data seems to suggest. I think the mutual fund industry has done a good job of actually getting people who earn above a certain income into the thing. Where we have failed maybe is that we don't have the equivalent of a Jan Dhan account or those kind of things. What can be done to get a Jan Dhan account kind of person into the mutual fund industry? I think there we are yet to do something, if you ask me. And that expansion is what led to bank accounts going from one number to a number which was 5 times bigger. There we have not succeeded so far. That's how I look at it. I'm sure Sailash will have better things to add.
I think it's happening, boss. If we were given if we were looking at it 5-7 years back, would this kind of a large change in the industry happen? This would become mainstream. That change was so rapid even for us to get a sense of it. So there was a change, right? And enough and more. Today there is zero friction. There is no better or more transparent product than this compared to a lot of other products which are there. Very, very well regulated, and which in sense means that investor protection is extremely high there. So everything you want is there. It's ready. It's just about also last 10 years, income growth in India, real income, job creation has been below average for various reasons, the global slowdown and things like that. So all that also leads to a deferment, gap in terms of how economic incomes have grown for people and their ability to save. But I think we are ready. Platform is there. Brand is there in the context that, a mutual fund is now a respected choice. Today, somebody is putting money in an FD. He does consider mutual fund as a category to do it. I think the greater we simplify, like, we get products which are a little more simpler, a little more easy to understand, and maybe for first timers come up with some solution-based products, I think should work. And it will happen. I think it will happen faster than all of us think. And I think that journey, we are onto it today itself.
All right. In the interest of time, and I have a lot of questions that I would like to ask as well. Unfortunately, we have to get back to work tomorrow. We can't take holidays unless my boss lets me. I'm going to ask in just a bit. But, sir, can we end the
Sure.
panel?
Yeah. Okay. So, very clearly, I think the messaging from the mutual fund industry is very, very clear to answer that question. SIPs and not tips matter. On that note, thank you, gentlemen, for joining us.
Aspect, and I think that's the idea behind the setting up of this panel and the idea for the panel itself. You need to have a certain mentality to make it large, right? To make it big. We're going to discuss this with the two experts here, with the two veterans here. Please join me in welcoming onto stage Manish Chokhani, Director at Enam Holdings, as well as Raamdeo Agrawal, the Chairman of the Motilal Oswal Group. Neeraj, over to you.
To just follow you, Raamdeo. Okay, gentlemen, thank you so much. The idea of this panel, I'll tell you honestly, is that a lot of people said, and rightly so, that हमें पता है पैसा कहाँ डालना है, लेकिन जो बड़े लोग पैसा बनाते हैं, वो जिगरा कहाँ से लाते हैं, इतना पैसा लगाने का, right? So that was the idea to try and figure out that how do you guys, when you decide to bet big, how do you get the courage to bet big? What is the homework that you do when you bet big? And can you enumerate that with some examples as well so that it becomes a bit of a learning session, right? So that was the idea of doing this session. As Murli said in the last session, sips and not tips. मैं बोल रहा हूँ चलो We can't do sips here, but we can at least get a sip of the mind that you guys possess and the courage that you possess when you take those large bets. So let me start. Either of, okay.
My senior.
Okay. Everybody's senior, yeah? Mr. Agrawal. When you decide to bet big, what is the approach, what is the focus, what is the mind space that you bring to the table when you decide, okay, I like this bet, let me really bet the house on it?
So, the very fact that you are calling it bet, we invest.
Okay, sorry, let me correct. By the way, is the audio okay behind? Because I just want to ensure. Do you want it to be louder?
Louder, yeah.
Okay, guys, can we just fix the audio before we start the session? Because this is important. If you can just...
You know what's happening, Nilesh? I think the sound is coming here and it's hollow over there, even when we were sitting.
Okay.
So he has to do either loudness or bass or something.
You are coming very clearly.
Okay.
I don't know.
That's the Bachchan voice.
That's the Bachchan voice. Okay, guys, can you hear me clearly? All right, great. Let's try. If the audio is not all right, I'll ask after a question again and we'll try and correct it as well. Yes?
I can use a hand mic, yeah?
Yeah.
Check.
Yeah.
Hello.
No, I'm okay on this. Can you hear me? Oh, I should use this. I should use this? This better?
Yeah.
Okay.
Okay, great. Chaliye,
Yeah.
let's do it.
So, good evening, friends. I think I'm now audible. Okay. So,
Branding.
Branding.
Is that okay? This is okay?
Yes.
Hello. Yeah.
All right, guys, everybody can hear it? Perfect. Thank you. Please.
So, coming back to your question of betting. So, investing is very different from betting.
Sure.
When you say betting, in next half an hour, 1 hour, the show is over. It's not like that. Investing is a very long process. All this, see, typically when I started my career, and so I was always investing for doubling in 3 years. Okay, and typically take a bet of 2.5%, 3% of my whatever is my corpus, and I'm very voracious buyer. So everybody has a different style. You would have different style. Everybody has a different style. Somebody buys 150% of the equity, whatever net worth. Somebody buys 100% like me, and somebody buys 50% debt, 50% equity. So everybody has a different style. I'm talking about whatever is your allocation of equity, in that what should be the bet size. Okay. So the way I look at it is, I start with 2.5%, 3%. Because making it very small has no meaning. It will have no impact. But what happens is how long you hold. Like for public money, SEBI says you can't go, you have a passive bridge beyond 10%. Okay. So if today only I was doing some numbers, so in 10 years, index is up about 3%, 3 times, roughly about 3 times. In 10 years, most of the good companies are up 4 times, 4, 5 times. But look at Bajaj Finance. It's up some 20, 30 times or 40 times, whatever. So it's absolutely out of the charts. So if I had bet 2.5% on Bajaj Finance, I would not cut it. But what will happen is, it will become 30, 40% of my portfolio. This is what really happened when the boom time comes. So in 98, again, I went and bought, say, Infosys 2.5% in 97, 98, first flush. And in 98, 99, I bought Mastek 2.5%. Both of them became 40% each of my portfolio in next like 24 months. So I didn't invest 40%. I invested 2.5%. Just that particular investment was extremely successful. But there were other investments which didn't do well during that period.
Which were 2.5% as well.
I started with 2.5 only.
You start with 2.5%. Okay.
So that's see, what happens is there is always a case of overconfidence. And you end up buying 9-10% also. That I did in 1 or 2 of them, it doesn't work. Like Indigo, when I bought, Indigo when it got listed, I bought 8 or 9% of the portfolio. We never made money. I became brand ambassador of Indigo. दिन रात Indigo की बात करने का, because the allocation is so high. So keep the allocation at a level where you don't bother about it.
Okay, that's a good tip. And I'll come to the preparation as well. But let's get the opener from you, Manish. When you kind of approach this, how do you do this?
So I'll take a step back. Again, he's my senior and my guru in many ways. So I will draw from him. See, all of us make a bet in some sense. When you find a life partner, that's your biggest bet in life.
Right.
So what is it that you're looking for in that partner? And what is it that is going to work for you? Both are equally important. And why should that partner be right for you? Because he or she will have a point of view as well, right? So if you think of it in that context, that it's a kind of love affair. We actually invest in stocks because we love it. The results, honestly, are more like a mark sheet, which you get at the end of the exam. You're not studying for the marks, you're studying because you love it. So if you come with that approach, I think that's the first big thing to take away. He talked about bet sizing, which is correct. That Nimish Bhai taught us that if you don't have a 5% allocation in your portfolio, you'll end up with a zoo. And the marginal idea coming in has to displace something. So 20 names have to fight to get into your portfolio. And don't make 50, 60, 70 decisions. Because you don't have to get so many right. But when you get it right, how big do you get it right? Is the question. And even for that, it's a very individual personality trait, like he rightly said. And if you think of even both of us, when we started our careers, he's of course started much before me. I remember I was told, यार ये बेटे को पढ़ा लिखा के CA किया है, MBA किया है, ये share market में जा रहा है. What a waste of life. And someone, I was very friendly with one very large business house, and it was virtually like a guarantee that you join and you'll be so and so's number 2. And it was a nice assured life. And my father said, your aspiration is to be number 2 or to be number 1? What do you want to do? And the choice one made was a bet to go to Enam, which was at that point an unknown place. I mean, I think Nimish Bhai was 35 years old at that time. Vallabhbhai was slightly older. It was a fairly unknown house. That's a bet as well, right? You're going with the people for a mega trend which you see ahead with people you like. And it's no different when you're investing in a company. So coming from your own personality, that can you walk a path which is different from your college friends because they are all in McKinsey or Goldman Sachs or Merrill Lynch and you're going over here. So is that your nature? If that's not your nature, then forget about making bets and equity investments and large size and 5% allocation. Not going to work for you. If you're looking for fixed income, you're looking for assured, my portfolio should go up every week, every month, every year. I should not miss anything in the market and I have FOMO each time something goes up. This is not going to work for you. So this is a eklo chalo re world. We work together with a lot of people, but in our own office, Nimish Bhai may have different stocks, I may have different stocks. I don't participate in half the things he buys and vice versa. Obviously, he's more successful. But it's to have that independence of mind and something which resonates with you. For example, he's a master in cyclicals. I cut my teeth on the newer age companies back in the 90s. So we had tech and media and telecom even then. And that works for me. I can't buy the deep cyclicals or the steels and so on, which he does extraordinarily well. But the approach to value investing, asymmetrical bets, is common. I think it would be common with him as well. When he talks of Indigo, we all grew up saying airlines is the worst business. But he saw the ROI in that business. And he walked alone. It may not have worked out, but his process was correct.
Got it.
We talked of Bajaj Finance. It's a common pain point, I think, for both of us. So we bought it early, identified financialization will happen. Bajaj family cannot get better values. By then we had seen Rajiv Jain. But the narrative that time was we haven't seen a seasoning of the portfolio. It was less than, I think at that time, less than $1 billion. It's north of $60 billion today. We bought it. It goes to 9 times book. We make tremendous money. We think smartest guys. But how can it something be 9 times book? Someone will come and beat it up. So the power of holding on was not there. And I sold it also. And then COVID happens and then it crashes. And you think, wow, I was so smart. I was so lucky I got out. And after that, it's gone up 4 times. Now you imagine something which is up, say 30 times, and then it goes 4 times more from there. What does it do to you?
Yeah.
And that's what it means. The real power comes from holding. Identification of companies, bet sizing, I think by and large, most of us will get it right at some point or the other. But that ability to hold on and see what I call terminal value, where is this going to, and going through those waves of up and down that's what differentiates like Rakesh Junjunwala or Nimish Shah from me, right? Where they're able to see and sit through the whole cycle.
Yeah, the question is how, right? And to both of you, that's the point. Because let's say, I mean, on the back of this, a lot of people who are listening into this, even in the homes or out here, might say, "Acha, chalo, holding is a good idea." They might hold on to losers as well. I'm trying to understand how is it, or what's the mindset that you bring to the table when you try and identify, okay, this is a bet that I want to hold for long, and this is a bet that I want to cut. How, what goes behind that?
I think the process of stock identification itself. See, because hello, yeah.
Yeah.
So the process of stock identification, like everybody has a process, and it comes over a period of time. When I started in '87, I mean, we were all over. We knew only one thing, EPS and P. There was no third ratio. We didn't know. And over a period, we learned. And then, say in 2014-15, we said, we want to look at QGLP as a process. So I can do QGLP of any company in 5 minutes flat. And I'm very clear, I'm interested in this company. Then you go deep dive. You go through the, kind of a quarterlies, annual reports, your, nowadays you get edited con call transcripts, deck, you get, companies go out of way to put you the deck on quarterly basis. So everything you do, then you go and check, meet the management, meet the plant, you do everything, whatever is needed before you say, okay, I'm in. And then after that you buy, and then in the process, you become even more confident or you lose the interest. Okay, it's not that great, that kind of thing. So meeting the management, see, because it's about, you are betting on two things, business tailwind and management tailwind. Okay, business tailwind I can figure out sitting at my office. But management tailwind, till I have visited the office and met the guy and spent, I like to spend in their office. Want to see their culture, their coffee, their everything. So there you decide, ये काबुली घोड़ा है, ये लंबे रेस का घोड़ा है.
Sure.
That bugger is going to really go out of the charts. So in the same business, you find the guys who have that passion and energy, because now everybody is honest, more or less, almost everybody is honest. With the GST and all, I don't think anybody wants to mess around. So the honesty part is more or less taken care of. Then the competence. Everybody is not as competent in the business. So then you can see that competence also in the financial statements. But do they have that passion and the urge to, really grab market share or do something which is, in this growing economy, again, grow at 3x, 4x, like PSU banks. They don't want, they grow below the industry average. The industry is growing at 12-13%, they'll grow at 7-8%.
Sure.
Then there are banks which will grow at about, say, 1.2 times. And then there are banks who are saying, we'll grow at 2x, 3x. HDFC Bank said at 95. Our formula is to grow 2x. 15% credit growth, will grow at 30%. You see what has happened.
Right.
So this is what is, so in interaction, that QGLP, quality of business, quality of management, growth, longevity of growth, longevity of quality, and then having said all these four, then look at it whether price is reasonable or not.
Sure.
Sometimes you hit very low price, sometimes you hit reasonable, and sometimes it is obscenely high, and there also we get stuck.
Yes.
Yes. We bought all the digital companies at the top. So it's not that we don't commit mistake. Despite all the research and all, we commit mistake. But it's fine. 2.5% only, no?
Sure.
Yeah.
Okay. I have a question follow up. Then I'll come to Manish, and then I'll have again come back to this topic of jigra kaise aata hai. I know process is a part of it, but here's my question to you. You have access to managements. You can meet the managements. They can come to meet you in most cases, right? All budding cases. A lot of people, or most of the people, right, don't have that luxury. What do they do? Because they can't identify that management mein kitna hunger hai, except for when they see the management on TV or on digital, right? So how do they bring about this? What do you think?
I don't think what access, see, earlier really there was an access and privileged position in terms of information. Even getting balance sheet was very tough. But now with the quarterly con call and deck being given by them, and there you have continuous Q&A session, nothing is left. It is just that we are old types and we want to meet them and see them and all. You go to YouTube and you ask a company also, on the company sites also, there are a lot of interviews and all. Most of the good CEOs are being interviewed by you and everybody in the television. It's there in the...
so you think that is also good enough to kind of judge
more than sufficient.
Enough. Okay.
More than sufficient. But if you can have one-on-one discussion, it just gives an edge, little bit away, not much.
Okay. Manish, quick question. One, do you also do the 2.5 formula, or at times you go high? How do you bring that courage? Part one. Part two of my question. for a lot of people, there might be a disbelief at times around longevity. Okay, जैसे आपने बोला कि वो stock has gone up so much, now भी और कितना बढ़ेगा? So there's a bit of a disbelief that comes in. It can't do more. How do you counter that disbelief?
So, okay, the first question was 2.5, 5.
That's
10.
just a number.
So honestly, if I don't feel like I want to buy 5%, I usually will not do it. And 2.5 is really the starting point. And it kind of, you buy the 2.5, then you sleep overnight and see how it feels. Because something tells you from inside that I want to go to 5 or not. There are times, and he's right, where you feel I can bet the house, I can go 10% on this. And both of us, I don't think we take leverage. There are people like others who will not buy 2.5, but they'll buy a levered 2.5.
Sure. Yeah.
But for every person who's become a billionaire, there are 99 million people who have gone to the streets. And honestly, in business, you make money either by margin or by velocity or by leverage. Velocity is really all our fellows who are buying and selling every day. I don't think it leads you a lot anywhere. Leverage to me is, I'm not in a hurry to get rich. It's a country with tailwinds behind us. If we follow the process, we basically will beat the market because you know what to avoid. So that itself is good enough. So if you focus on margin, and asymmetrical bets is really the heart of it. That you asked, for instance, of an example. So my son had a small allocation and he brought out a company which was at that time a 1500 crore market cap. It had already delivered 150 crores of PAT and it had a 35% ROE. And on whatever we could see of capacity growth, you could see 400 crores is possible for this company in 3 years. Now, to me, that's a no-brainer, and it's a bet that he took, which should be 10% of his portfolio. It's doing well, and it's not part of a mega trend or a theme, but it's something which fits into your macro understanding of where this business is going, where the world is going, and it meets the promoter criteria, the business criteria, capital allocation criteria, and so on and so forth.
Sure.
You would take that bet. So that's kind of answering your question one. Your question two really is how long do you hold on? And there's no honest
Or how to
answer.
counter the disbelief on
No,
longevity.
disbelief, see, it's right or wrong. Even the person we all grew up reading about, Warren Buffett, he made tremendous money in Coca-Cola. And for the last 23 years, it's compounded at 2%, and he's still holding it. So even currently, if you look at so many companies which have done whatever on consumer stocks in India, they are all quoting on 60, 70, 80 Ps. They are great companies. But are they great investments? I would question it. And my son, when he came back again from his education abroad, he said, Dad, all this is great, but has India ever surprised you on the upside on consumer companies? And we used to have discussion on two very obvious themes. Half of India is male, young population, and there was the narrative that everyone has to shave. 20 years later, I look at Gillette and I wonder what happened. Where did all these people go? Like, everyone's not growing a beard like Virat Kohli.
Yeah, but still.
But what happened? Like, where did this opportunity go?
Yeah, we three are the anomalies.
The other half should have been using P&G sanitary napkins. Where did that opportunity go? So for every titan which has worked out, you wonder, like, people are buying gold jewelry, but they're not buying, shavers, or they're not buying sanitary napkin. Something works, something doesn't work. He famously narrated his example of Eicher, which he bought for X reason, and the Y reason worked out. But it worked because it was still an asymmetric bet, because the entry price was so good that, and then like you do in a marriage, right? You have to stay deserving of each other. So as the company does well, we update ourselves as well. Do we want to carry on? How is the bet looking? And in my head, I always think if this falls 33%, to come back to this price is a 50% rise.
Right.
And at that 33% fall, am I a buyer? And when I don't find that answer resonating, is typically when I will say, time to say goodbye.
Okay.
And you may miss it. And I have a lot of regrets on, I just mentioned, one, for example. But I would rather sleep happily at night than live with that regret that I had a great exit opportunity and I didn't take it because of greed.
Got it. Okay.
So it's, look, eventually this business to me is a lesson in, how do I say, finding humility. Each time you make a new mistake, each time you think you're super smart, you get whacked by the market. So you just take the previous lesson, dust your shoes kind of and walk on and find the next field to conquer and the next mistake to make. Because if you just sit at home and keep doing the same thing, you're not going to end up anywhere.
Got it. No, that's a vital point. Thanks for that. May I ask you, the most common thing that a lot of people do is if they bought something, right, and if they have a conviction, whether it's right or wrong, they're not comfortable buying it higher, they're comfortable buying it lower, right? Pyramiding is a commonly used term now, but not too many people are able to go out and take that step. कि मैंने stock 100 पे खरीद लिया, now it's 150, it's doing well, but मैंने तो 100 पे खरीदा था, how do I buy at 150? I want to ask you, do you do that successfully, part one? And if so, how do you convince yourself that, hey, let me go out and buy even more, even if the price is higher than the price that I've seen?
So higher price is not a problem for me, in the sense that I can, as the fact changes, the price will change, clearly. And your understanding also changes. So if I have bought some company today, and maybe I don't have enough quantity, and say I bought 1.5%, and thinking that let me progress, because a lot of research happen after you buy. And so you start feeling 1 quarter, 2 quarter, 1 year, 2 year, and it's working out better than what you thought. And new facts come. And then you realize that actually we are in exponentiality. So because you will realize a lot of things because you are an investor. And you are keenly interested in what other guy is saying. You know, see, where you make money, where the growth happens exponentially. And it is not that every company, see, India is growing at say 6-7%. That's not exponential growth. That's a linear growth. But in 6% growth, there are businesses which will grow at say 12%. And there will be companies which will grow at 25%. And there will be companies which will grow at 36%. We have to be lucky in our portfolio. See, I would like to have 10 out of 10 in that 36%, but it doesn't happen. We think that we are going to buy into 25%, but it turns out to be 5%. So we have to take whatever basket and you have to become lucky. See, luck part is very important. As he told about Eicher, I bought Eicher thinking that the guys, they told me that now the next leader of the trucks, because this, what is the that BS4 or something, 6 is coming, and these guys don't know anything. We are the guys in forefront. So we'll become #1 truck company. So we went, saw everything. We bought it as a truck company. Little we knew that this is a Fatpatia company. You know, so what worked, we knew that it is there, but they were making 60-70 crores profit in that. But that became the mainstay, and we stayed on. So from that 2,000-3,000 crores market cap, it went to 85-90,000 crores market cap. So, you know, that kind of thing happens, but we bought good stock, good management, good business, reasonably good management. Storyline would have been somewhat different, but at a reasonable price. And you sat through. So what happens is, when I'm saying 2.5-3%, I don't have 30 stocks. I never make more than, I'm very comfortable with 5, 7, 10 stocks, 20 stocks. Because something which is done earlier, that has occupied a lot of space.
Sure.
And then I don't want to sell it. I hate to sell stocks. Actually, I hate to sell stock, and that's why I overstay also. I overstay. That mistake happens. Like I sat through Hero Motocorp or even Bharti for much longer period than I should have. So one is that in some cases you have seen the peak and then you sell it 30-40% lower. Though you made 25-30x, but still you're not got anywhere close to the peak. Second, you got the peak, but you overstayed for 10 years.
Yeah.
So again your IRR comes down. So all kinds of things will happen, but basically real lottery, I mean your IRR changes of the portfolio only when you hit upon 1 or 2 big ones. And that happens partly by the process and partly by the, I would say a lot of it because of the luck.
Okay.
But we buy things where there is a possibility of that happening. Whether it will happen here or there, nobody knows.
I'll just add, while obviously luck is a very, very important factor, but it's because I always say when preparation meets opportunity. Now, because he has done the work and he's hunting in the right field, he's going to get lucky. The odds are he will get lucky. But if someone just decides I will land up today and I heard something somewhere, I heard something somewhere else, and I can make a 10% bet, and I'm feeling lucky today, like someone goes to a casino, that's not going to help you. So what he calls his personality type to be able to go through that volatility up and down, which we all have to live with. We are
Sure.
not fixed income guys.
Yeah.
If you ask us questions on debt, we will fall asleep. Right? We are happy. Whatever dividend we get by God's grace is more than what we need. 3 years of income is always kept aside for a rainy day. And that gives you freedom then to do whatever you want. You're not under pressure to do stupid things. But then when you start saying, how do I prepare? What he calls business analysis, part 1, are you on top of the game there? What part 2 we call management, I call it the 5 C's. That does this guy know capital allocation? Does he know culture? Is he properly compliant? Does he have a view on customers, products, what is coming new, technology, whatever, to be on top of it? And what about the competition and how are they playing that? And do they have rigor? Sometimes people get lucky in one cycle and think I've achieved everything in life, but rigor, which in our management team, a lot of our colleagues will laugh, I used to call it target, plan, execute, and review. And if that management cycle is not going on continuously in a company, however great they are, they will falter. And the best companies which we stay on are what I call relentless. We are again using Bajaj Finance example because that man, 16 years, relentless. Finances, I mean, to give money is very easy in India.
Yeah.
Anyone can do it. And now people are giving money on the basis I can give you money in 10 seconds. What is the rigor? The algorithm is not going to go and do your collection for you. Where do I want to target it? What pricing? What costing? What is the risk metric? How do I supersize it for that particular niche? That is rigor. Old days we used to talk of example of say Infosys. It was all about execution rigor. It's those companies which really become wealth creators. And if the culture is right, then the people will stick on. They will become, millionaires themselves. How do they behave when they become wealthy? Do they lose their frugality? Do they go crazy on their capital allocation? Are they then starting to buy jets? Are they making acquisitions abroad? Those start changing your thesis. So company has to stay deserving and I have to stay deserving, but I have to stay on top of it. I can't just make the bet and go to sleep. I'll come and see it 6 years later because someone else made money by just sitting on stocks. It doesn't happen like that.
It doesn't happen like that for sure. Okay, let me ask the audience because I'm sure some of you have questions because a lot of you had said कि हमें जानना है कि how to develop that courage. There are a lot of hands up there. Okay, let's have the mics. Sure. I'll come to you. Guys, can we have the mics to people?
I have a mic. Can I ask a question?
Okay, will you stand up and
Yeah.
please introduce yourself and then ask the question?
Yeah, hi.
But short question, please.
Yeah, just one. Ritvik Sheth. I have just one question. What is the maximum allocation that you have done in a stock?
What is the?
Maximum allocation that you have done in a stock?
I think we both said 10%. We don't go above
10%.
that.
Okay, thank you.
Yeah, no problem.
So, what advice do you have to the retail investor when to sell?
Nandan is
running a fund.
Yeah, no. So the issue is that actually the serious money is made if you are continuously invested. You can sell a stock, but don't sell out of the market. So for your mental satisfaction, you have booked the profit. You bought at 100, you sold at 200, you have booked the profit, pay the tax. But still that 200 rupees you got, I would request that you just invest it before even selling. So continuously, because this is, see, India had a compounded past, it will have a compounded future, and there is a compounded investment opportunity. So if you sell out and you stay away from the market for 2-3 months, you don't know, market might move up by 20-30%, and then you can never catch it. So, I mean, I don't know when it will move. All these charts they keep telling us, but they'll always say both sides. It will go up to by 500 points up, and if it doesn't go up, then it will go down by 500 points. Arey bhai, main karu kya lekin? So I think so you have to do your own stuff. You have to remain. What has worked for me is 100% invested all the time. But I do sell by stocks in the sense that what has worked, say it has become, as I said, if a stock has done well or stock is not doing well, I'm getting bigger. Yes, I do change, but I remain invested in one stock or other.
As you very famously told me, the bottom belongs to the person who is invested. It's very difficult to catch the bottom otherwise.
Yeah. But I have a slightly different answer. I find in bubble phases, which Naren was talking about, and we lived through some climatic bubbles. And I remember I started my life with 7 lakh rupees. just when Harshad Mehta bubble happened. And you could see this is completely nonsensical things going on. And fortunately, I had just started in Enam in those days, and no one was greedy, no one was buying any crap and so on. And we were out 3 months before the peak from everything. I basically sold everything and didn't come back to the market for 1 year. So the next investment happened only in April 93, 1 year after this whole crash had happened. That taught me a startling lesson that while I'm reading Warren Buffett, the reality of our emerging market is slightly different because they don't have stock operators of that kind in the developed world. Second experience was in the 98-2001 TMT bubble. Again, famously, and this story I've spoken about earlier, so I can share it again. I used to be the analyst for ZTV. When the business was written, I had written the business plan for them as on the banking side. And 6 years later, the company was available for 150 crores. It was a 16 crore equity and 80 rupee price, something like that. And like, this is a no-brainer, asymmetric bet, can't go wrong. And I buy as much as I can. I was a small analyst in those days. And voila, within 18 months to 2 years, it was up more than 10x. So 70 rupee stock had become 800. And I thought like I'm the genius of the world and I sell it. That's the era of Ketan Parekh. It goes in the next 3 months from 800 to 16,000.
Whoa.
Now imagine, assume it wasn't, but assume it's 1 crore has become 10. But now when 10 goes up 20x, it could be 200. That's the extent of miss, which you miss in a bubble phase. But you also know if I don't sell somewhere here, and Manik Bhai, who was our founder, he taught me, when you have a fundamental pick and it's going up, you please shift in your head to the technical side. And you now see what the market is telling you. Don't sell on rising tops and rising bottoms. Sell on the way down. It's okay if you sell 30% down. 16,000 at 33% down is still 10,000 compared to 800. So that was the second lesson on selling. Third lesson is when the cab driver is giving you tips like 2007 bubble, which was happening, or we're having crazily priced IPOs, and everyone and his uncle seems to be making money and you can't understand. And I remember I went through a phase thinking maybe I'm getting old. And people now are buying stocks like they buy art. So there is no price which is high enough for Bitcoin. There's no price high enough for Tesla. Maybe one should just get out and sit on the side. That's the time you should be selling. But I would sit for 3 months because the urge to reinvest quickly is very high.
Yeah.
But in that 3 months, you go to the counter trade of that is typically where you find bottom. So 2001 top when we sold, we bought a lot of these PSUs which were selling for cash on the books. So BL, Concord, Grasim, SBI, all were dirt cheap. Same way in 2008, the bull run was in all these commodity type, infrastructure type companies. The trade on the other side, which worked out well, was TCS was cheap. The pharmaceutical stocks were cheap. So every bull market ends and a new bull market starts in something else.
Yeah.
And you get great opportunities over there. And like he said, asymmetrical bet. The price has to be so good that a sector I don't like currently it happened with real estate. We all hate the sector for last 15 years. But great sector to be in. With the coming of RERA, with the cleaning up and what we all went through in COVID and few people coming out. Few guys are left who know how to do capital allocation. It may be a great place to be. I'm not personally invested there, but we saw it, we talked about it, we just didn't act.
Okay.
It's a bit like I have this airline phobia. I didn't buy Indigo, I didn't buy real estate, but you can see the tide has turned over here. So that's an example, if it helps.
Yeah, it does. We are in a rising top right now, you would believe.
Our markets are still in, like he rightly said, it's a boom phase. It's not a bubble for sure.
Okay, great. Guys, maybe 2 more questions. Do we have time for 2 more questions, guys? Gentlemen? Office? 2 more questions? Yeah, okay, fine. 2 more questions. Whoever, wherever the mic reaches, please. Sorry, there's so many. Sorry, I've given you a chance before. Can we get somebody else to do it, please?
Hi, I'm Smitesh Sheth. And whenever I listen to you guys, I get too excited, whether in person or on TV. But when I sit in front of the screen, sometimes my temperament goes or emotion goes for a toss. It is a very personalized thing. So how do I cultivate myself sitting in a room, what I this gentleman like Raamdeo ji and you do, how do I do it myself, or how do I cultivate myself over the
I'll give you
period of
the
time?
easiest answer. It helped me enormously, and I hope everyone does. If you can take 10 days and go for a meditation camp, I went for Vipassana. No, I'm not joking. What happens, you see, you'll experience yourself, and I experienced it, that you see everything is an impulse. It comes, it rises, and it passes away. It may be greed, it may be fear, it may be love, it may be anger, it may be regret, it may be emotion, whatever. Everything passes away. It actually will make you a lot more equanimous as a person. And equanimity is what you want in a market where you're dealing with emotion. People rightly said, no, that the intersection of greed and fear is the stock market. And if you are equanimous, you can take advantage of that. But if you are on one side of the trade, someone else will take advantage of you. So I really seriously think, and it's not a joke, but serious suggestion, if you really want to have a balanced temperament to invest, spend the time in meditation. If you want to take a recommendation of bigger guru, read Dalio and others, who also spend enough time daily on meditation. I hope that helps you.
Thank you. You want to add to that? Sorry, before we ask the next question.
See, I am reconciled to 12% market and whatever better you can do. So if you are sitting with the portfolio, because I am not a churning type, I don't go to the screen every day. So I have done my homework, I have allocated, and let the quarterly results or whatever happens, let it take off. I know one thing: if you have a diversified portfolio of even 10, 15 stocks, if the market does 25%, you hope to do a little better. That's it. So just jumping with the 10 times, 20 times you see the price, or you're becoming impatient, or some headlines are there, some crash is there, and just becoming impatient has nothing, it will not help your portfolio at all. That you have to mentally get reconciled. Market is, yours is also an index. What you have in portfolio is also an index. And there is an index which is Nifty or whatever, BSE 500. So you have to be reconciled that finally in 4, 5, 10 years, you are going to make Nifty plus. And that is your competence or patience or whatever you say. So you'll make, I would say, the best guys will make about 15%, and extraordinary guys like Rakesh and all, they'll make 20, 25%. So you'll fall somewhere there. And that I'm reconciled. I'm more like 12 to 15% kind of guy. And then uske upar se aata to bahut acha hai.
Last question.
Yeah. Good evening, sir. Good evening, sir. My name is Ankush Mahajan. Sir, I have 5 stocks in my portfolio, and all the cash is deployed now. Still, I feel that these stocks could grow by 50% to 100%. So meanwhile, I get a more opportunity that could be more than 100%. So what should I do now? Because the real power is lying in the holding.
You understood the question?
You're saying you have 5 stocks which will grow 40, 50%, and you found something which will grow 100%.
Yes, sir. The question
It's a
is
good
that
problem to
cash
have.
is limited. What should I do now?
You
Cash
don't
is
have
limited,
cash.
so what
Cash
should you
is
do now?
limited.
You have to sell
And there are other
you sell your
opportunities.
5th position,
Yeah.
the least likely one, and convert to your 100 if that's what you believe.
But real power is lying in the holding.
I can't follow what he's saying.
Sorry, what are you saying?
The real power is lying in holding.
Since the real power lies in holding, but I have found a 100% opportunity, should I get out of the 50%?
But you're
opportunity?
finding the 100% opportunity is better than your 50 opportunity compounding. I personally can't find those, but if you have 5 like that, it's a good problem to have.
Thank you, sir.
Thank you. Listen, I know there will be more questions, but it's also very late.
I just want to say one thing though.
Yeah.
A lot of the crowd here is actually below the age of 30. I just want to make one point. If you take the 100th company in India today by market cap, it would be a $8 billion market cap roughly. And the owner would have at least half of that company. So that person is worth $5 billion. The most successful investor we talk about in India did not have that number. Just by frame of reference, when you say you're young, you want to take a bet, and you have 20 years ahead of India in a golden period, this is the time to build a business. When we came to stock market, we were the pariahs of our families, that why are you going there? Right now, if you go to build a business, people will think you're mad. Everyone wants to build a family office, everyone wants to be in stock market. The contrarian thing now is to go and build a business. And the opportunity for wealth creation in something you can own 100% of. is far crazier than buying 2.5% of something which is fairly well discovered. So it may work for him and me at this age. But if I were young and I were 25, I would be building a business. I would not be coming to stock market. I hope I can get that resonated.
You know, I'll just end this because I don't think anything more is required to be said after this. This was golden, both of you. Thank you so much for this. I just want one addition to make here. There was a series that I did with Mr. Agrawal, which was a 4-part series called Power of Compounding, Power of Size, Power of Opportunity, etc. And thankfully, last time that we met, Raamdeo ji told me that now we should do this thing in Hindi. So on national television and in front of people, I'm taking a commitment from you that we will do this in Hindi now. It was your idea, so I'm just pursuing it. So that is part one. So thank you for that. And Manish, when I did this idea of this interaction, and he'll hit me after this conversation is done, he sent me 3 beautifully crafted notes that this is what we should talk. All that we've done in the last 40 minutes is talk about everything else but those notes. So, Manish, I would love it if at some point of time in the next 6 months, we can do a conversation on television or on video on those notes.
Sure. Happy to do it.
Great. Thank you. I've got 2 great commitments thanks to you guys. So thank you so much. And to both of you, thank you. It was lovely.
Ladies and gentlemen, dinner will be served in just a bit, but I want to take 30 seconds once those pictures are done. I think one of the sentences from this last conversation is what elucidates this point. Preparation intersecting with the opportunity is what gives you luck, and hopefully this platform will help you prepare, and the India opportunity is always available to you. It's come to me to also thank all of you for having visited in person and everybody joining in online. I started this event by thanking them as well, and a lot of people are watching on social media. So thank all of you. Give everybody a round of applause. Look at the person next to you and say thank you for making it in person. We've got dinner served outside. I also want to thank the guys who set this up, and that's the wife team who's standing at the back. Say hi, just a big round of applause to everybody. And to all the lovely panelists, I think you've already shared your appreciation, and I'm sure all of us will benefit quite significantly over the course of the coming days. But thank you all once again. If you don't follow BQ Prime at this point, please do so, and BQ Prime Hindi as well on all of our social media platforms. Thanks.